I really appreciate you coming on, especially at such short notice. And the time zones are a bloody mess. When I looked it up, because I'm from Melbourne, right? So it's not that
Mhm.
far. And you guys are what, a couple of hours, 2 or 3 hours further along?
Yeah, I'm in New Zealand at the moment, so normally I was expecting you to say 2 hours time gap, but you're in England, UK time
Yeah.
or something? Yeah.
Yeah, well, people get confused about where I'm from because they can't quite place my accent, or the people who can think I'm still in Australia. They don't realize where I live. Um, and I mean, last cycle I was doing a lot of spaces. And so that's the only reference point people have is my voice. And they don't really know
Right.
where I am unless you're really paying attention to like my
Mhm.
tweets and my shit posts and whatever. You don't really know where I am.
Right.
Um, but yeah, I'm in London. I've been in London all along, so it's like
Oh,
trying to
okay.
organize this has been a bit. When I had a look at the time zones, I'm like, this is possibly the worst combination of two time zones to coordinate because there's like a 4 hour window either side.
Yeah, it's okay. It's okay. Because we do business in Hong Kong. I'm currently in New Zealand. There's in Switzerland as well. We're partners from private bank, and then if the call happens to be in America, man, that just covers every hour, every zone, and so it's always someone draws 4 a.m. or something stupid. So this is okay.
I always every time I watch a Willy Woo interview, you're always in some obscure place with a with a strange background, and I'm like, what is this guy up to? What is he doing?
Let me get my little pink huggy room. That's from my daughter. This is her sort of width, and it's a cute thing. What you see here are skateboards, longboards, and what you see back there is a piece of Bitcoin artwork that I collected in Las Vegas in Tone Vase's unconfiscatable conference. It's a
I
Yeah,
have
it's a bit
to
of
I have
artwork.
to go to his conference. I met him when he came to London, um, when I was still anon, and really enjoyed his company. He seems like a really good company. And I want to go to his conference. I was gonna. He did invite me to Docs at his conference, but I'm like, I think I'll just wait till I launch a podcast.
Right.
I think on a long, like they say, on a long enough time frame, we all become podcast bros, don't we? So it's like here we are. Yeah, I'm ready to do that. So like, hey,
I'm definitely not gonna do a podcast,
hey,
but I
the
will
only
be there.
reason you
Yes.
became a Bitcoiner and raised all these funds and managing investments is to become a podcast bro. That's so you're going to become a podcast bro. You're going to become we're
I'm
all,
trying to reduce them, right? I think I've been quite successful because, we had the kids and like been off the scene for 3 years, but I'm turning most of them down because I don't want the prominence, to be honest, like because it's becoming it's an OPSEC issue. As this becomes mainstream, I want to be less and less known, and I want to be more known. So I don't think it's the right decision to be public.
can we talk about that a little bit because it's something I've wrestled with since I started this account, and really up until last cycle, there weren't really many people within the Bitcoin space who had large profiles. But suddenly, like when I first started, it was I started following the scene around about June, July, August of 2020. But I started the account,
Right.
started posting in January the 2nd, 2021. At that time, I think the biggest accounts in the space were maybe anywhere from 40 to 80, maybe 100,000, right? And I think Pomp probably was the biggest of them all. But everybody who had a bit of a footprint probably 10x in the last cycle.
Yeah.
And I
Yeah.
wonder,
True. That.
but you did much more than that. You and Plan B in particular just went astronomical through the roof. You both broke 1 million. I think you were the first. You guys and Pomp were the first to break 1 million followers on Twitter.
Definitely not the first, but yeah, we definitely probably, accelerated the most. I just did it for commercial reasons because I knew I was going to launch a newsletter and I just launched it on Twitter. And so I just said, look, if I break, I don't know what the number was, a certain number, like 100,000, whatever the number was, I can't remember. I will then launch the letter. And so I just posted, that's the algo, right? You just post every day and then it ticks up. Because I'm not a post every day guy. um, and broke that, and then launched the letter, and then did the podcasts, and then the whole thing blows up. Because like you could see Plan B going boom, 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 boom. There was steamrolling coming up out of nowhere, and then I started doing this thing to launch the newsletter, and then we were neck and neck, and then he blew up actually at the end. He doubled 2x. He went to two, almost I think 2 million or 1.4 million, or anyway, it was just crazy. But since then, after that bull cycle, I've been basically neglecting the account. I was even going to get off Twitter, but it was all just to launch the letter. Um, and nowadays, you can see I post once every few weeks. Don't do the podcasts because I'm not going to play this particular game. And yeah, I think it's the I don't think it's the right choice right now. For me, at least, it's different. But like, I don't know. I had this discussion with Daniel Batten, right? You, there's gonna be, you say Bitcoin breaks 1 million, 10 million, look, 10, 15 years from now, unless someone solves the custody issue, we're going to um, everyone who's held Bitcoin publicly known are just low-hanging fruits for a wrench attack. It doesn't even need to be much. Probably they don't want to, like, they wouldn't want to target someone that's super, super wealthy. They just want to know you hold self-custody Bitcoin. And as long as it's between 100,000 and 500,000, I think that'd be a nice sweet spot. They'd go for you. And Yeah, like it's like solving the custody issue. As Bitcoiners talk about solving um, the self custody because everyone's buying ETFs or leaving on the exchange. But there's a problem also if you self custody, then you've got this wrench attack issue, and so someone needs to solve a kind of it's a little bit like Fediment. You need to solve where you have a key, but you can't actually withdraw because it's sitting with all these other parties, and it's like trying to attack a bank ultimately. And I don't know what those processes are. Maybe it needs to reflect that, like the person that's withdrawing needs. Yeah, I don't know what the solution is yet. But I think, yeah, there definitely has an issue.
How do you think the hype cycle last time changed the scene? Because I wasn't around pre mid 2020, and we had an influx of people. I was part of that. I consider myself to be the early majority, not an early adopter. Not even a late early adopter. I think I was part of the early majority, and I think we're just sliding up on that S curve adoption that we're about to see the majority and then the late majority in the next 4 to 8 years. But how do you think it changed the scene just on Twitter alone in terms of conversation, the dynamic? Because I think when I entered the space, I felt a lot of gatekeeping that I didn't just disregarded completely. But I saw other people who were subjected to that. But interested in your view of how you think the scene changed, the culture of Bitcoin on Twitter. How do you think that changed?
I mean, it's gone through a lot. In the early days, On the early days, when I'm saying early days, it wasn't really early to me. Is pre 20, before Mount Gox blew up, would have been early days. The days in which the average person could mine Bitcoin on their home setup, whether it's GPUs or whatnot. Um, and so that I feel like that's early. That was that chapter one, long gone. I felt like I entered chapter two where mining was not possible, but there was a lot that was not understood about Bitcoin. And everyone on Bitcoin Twitter, it was Twitter back then, we were very hungry to find deep technical answers to things. There were a lot of tech discussions. I mean, remember the block, really, I came in the bear market of 2014. That was over the block size wars. There was a very, very deep and technical. A lot of people weren't sure if we'd get through it. And so it was just heavy. It's really heavy and not heavy and as in depressing, but heavy and deep technology. There was less sort of um, you know, like disdain for shitcoins. There was altcoins were considered interesting, interesting sort of things to look into and study a bit. So that was different. And then post 2017, so it was 2014 to 2017 was this phase where it was the early retail, right? Like it was like the early before that it was super technical, and then after 2017 when things blew up from when Bitcoin ran from $150 to 20,000, and then the altcoins just went ape shit because we didn't know what it was, and we thought it might be, you know, it might fulfill all the stuff and replace blockchain technology would effectively go to the moon and be huge part of the infrastructure. Um, that post that, and there was a lot of grifting in that. Then that led into the next cycle that you were in, and that one was huge disdain for shit coinery because in the second epoch, 2014 to 2017 was it became very, very clear what the game was, which was print a token, back it with a white paper. And it was a white paper because you wanted to copy Bitcoin and you wanted to sell the fact that this is another Bitcoin when it was priced at under a cent. And VC backing and all the whole game, you pump your coin, pump and dumps and market makers, and then you dump onto retail. All that got very, very systematized and very well known. And you got the influencers coming in to shield the coins, and they would get they would stage it until the end. The largest influencers would then get handed the shilling just as it would ICO. And so there was all this sort of stuff, and it became that was the 2017 year. And so the culture in 2020 was very toxic, I think. But then it was also crossing into TradFi with MicroStrategy and so forth. And it got toxic as well. It got stupidly toxic. Not smart toxic, as in toxic maximalism. It
Can you
was
elaborate on that? Because I think that's an interesting point. So smart and stupid toxicity.
well, smart toxicity is like the Bitcoin maximalism, which is kind of like the antibodies, where it's saying this thing is a scam and calling people out when they're doing shitty shit, really bad stuff. And then but then there was this toxicness that came through, which was you're wrong, and it was just this like it was like mainstream public that if you go wind it back the prior thing, it was a whole bunch of effectively intellectual people that were trying to understand this and where we were to go, and then there was this attracted from 2017 bubble, a whole bunch of new retail that was just doing flame wars and saying you're wrong, you're stupid, ha 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 ha, And actually, then there was also, in my opinion, a whole bunch of bot farms that were attacking profiles that basically would, um, try and cancel people by saying, you're shit, whatever they would say.
You're a
And
shitcoiner
then
or whatever. Yeah.
it would get ridiculous amounts of likes. And I used to go through, because I get this on my feed, and I'd go through the top leading replies that would get high ranks on the likes, and I would look at who liked them, and they were just fake profiles, right? And so there was this sort of it's because in a way, I'd say Twitter also got to a point where it became very mainstream, and it got the tools to cancel people were very easy to target, and so, and I kind of wonder, and the conspiracist in me thinks that a lot of that toxicity might have been from government, like three-letter agencies trying to um, make this whole industry look like a clown show. Um, but that was so the last cycle was just stupid to me. And actually, a lot of Twitter these days, yeah, so for the most part, is it's not. It's good. I think it's gone a lot better since Elon Musk took it over, but it was getting to the point where it's just noise. And I remember having a conversation with Plan B. I don't care about my Twitter profile. I'm thinking of leaving completely. It just became a stupid platform where it was just random toxicity without any thinking behind it. Yeah.
I definitely felt that, and it's part of what made me tune out of conversations. So, like, I don't really use my account to express opinions all that much. Every now and then, I might, just allude to something, but it's not. I don't campaign for particular points of view. I don't take positions on any particular Bitcoin policy. No bips, none of that stuff. I just let it play out, and I don't use my account for a platform to really express all that much personal opinion. Um, Part of that is because I wanted to be inclusive for everybody, um, but also I just don't think it's worthwhile as a place for me to engage in that kind of discourse. And it's interesting that you said it became stupidly toxic, because I remember Nick Carter around the time that of his so-called cancellation. He wrote an article about cargo cult behavior amongst Bitcoin maxis, and it kind of gave Bitcoin maximalism a bad name. That kind of behavior, because it wasn't principled, it wasn't targeted, it was just reflexive, and it's in many instances, it was kind of misanthropic, in nature, the motivations. And it was kind of like, oh, we've seen this kind of behavior elsewhere, and we're just going to mimic what people did during the block size wars and whatnot. And that's why you see a lot of people posturing, for example, regarding their technical knowledge, because the people who are considered true Bitcoin OGs, they're all highly technical, very intelligent people. And most of the battles, as you alluded to, the intellectual battles happened on the technical front. And so it's like, unless you're a technical person, you can't be considered a true Bitcoiner. I'm actually the antithesis of that, because I have very little interest in the technical side of things. Just like I have very little technical interest in how my iPhone works. I want it to work. I'm a consumer. I want to see the benefits of it working. I want to see it in action, which is, it's sort of in line with where I came into Bitcoin, which is as the early majority. I wasn't an early adopter because, one, I wasn't ideologically driven. I don't have a political or economic ideology that brought me to Bitcoin. It was by necessity, really, and I think that's what's going to happen to the majority of people. But I think a lot of the misanthropic behavior could be um, almost perfectly described as cargo cult behavior. It's not principled or intelligent at all, which is kind of what you alluded to about the stupidity of some of the things going on. And it kind of makes me think, like, if the government agencies were were what do they call it? I forget the word. But if they were actually planting all these bots, they didn't really have to, because there were plenty of real people within Bitcoin
Yeah.
doing the same shit.
Yeah.
Right? So it's like, yes, a lot of people are undermining the scene perfectly well just by themselves. I think a lot of that has faded away now. But the bot problem is still there. I haven't seen that the bots have improved since Elon Musk has taken it over. What I have seen, and this may be a function of where we're at in the market cycle, is we haven't seen those concerted campaigns to promote those scam websites. You remember how those, like, send me one Bitcoin, I'll send you two, that sort of thing. Every single post I used to make, there would be like 5 variants of those campaigns, and I'm not seeing that at the moment. But maybe it's because of the price action.
No, I that was what was improved because like the moment someone did a promo follow on reply, it would drop to the bottom, and it would be hidden. And now I don't even see the hidden to expand the hidden tweets anymore. But I think it was very responsive to people like reporting, and it was picking up on some sort of signal. What I see now is a whole bunch of it, effectively AI bots, right? Trying to, I don't know what they're trying to do actually. They're trying to farm engagement. I don't know, but they'll just do an AI reply to your tweet, and it's just yeah, not that interesting.
I reckon
But
80% of the replies to anything I post is AI generated, and it's just made the comments useless. And I've thought about closing them off to anyone who doesn't follow me, or to verified followers only, or that sort of thing. And I just thought, okay, but am I sort of excluding people who either can't afford to get verified, for example? Um, yeah,
well, the thing, the nice engagements, the real engagements tend to go to the top anyway. I just don't know why you would write a bot to reply to other people's tweets. The only person that wants to write a bot to reply to your own tweets is your own tweets, right? Because it would then signal higher engagement. And so I don't know
I kind of do
why.
understand it, because what happens is when you're replying under a high follow account like mine or yours, um, they get much more exposure just in the replies than they would,
Oh yeah.
right? And so as a result, it's just the attention economy at work. And so,
Yeah, but it's an AI. They just no one follows them because it's so obvious that they're an AI. They're not saying anything.
okay, to you and I, it's obvious, right? And maybe to 98% of people, it's obvious, but maybe they're not harvesting people who can discern the obvious. Kind of like, you see
Oh
those
yeah.
scam emails. And did you know, like, they're deliberately misspelled and poorly formatted, because the scammer,
Yeah,
they want to harvest the most gullible people so that they don't waste their time with people who have their
exactly.
wits about them, right? And so,
I think I know what you do is you do all these AI replies. You might get some followers by real people, and then you've got yourself an account that looks real because it's followed by real people, and then you can use that to scam people using
yeah.
that account.
Well,
Um,
there are people who I follow who, within the space, they work in this space, or whatever, and they're not all that discerning about who they follow. And I've seen numerous obvious bots that they follow.
yeah, yeah, yeah.
Like, that
I've
lends credibility to them. And it
I've
may
seen
not,
this. I've seen this because someone tried to do a scam on me because I had my direct messages open, and I always check the profile and make sure it's legit. And it was followed by a really high profile person, and I was like, really?
yeah,
And it
quite
was
a few of them.
actually
Quite
yeah.
a
It
few of
was
them do that.
the thing is the scam, and I don't even know what the scam is. You must have had this. There's reporters saying I want to do an article and interview
Yeah,
you.
yeah.
But they're a fake identity posing to be a real
I've had
reporter
I've had
that
numerous messages like that when my DMs were open up until I had like 1.1 million followers, and then I closed them off. So I used to get all of these things, and I've had numerous ones posing as reporters. I'm guessing that what they want to do is eventually send you a link once they've got your trust, and you'll click that link, and that'll compromise your device.
Yeah, yeah, that's what I'm thinking. They're trying to build trust, and then they've got some other, a myriad of scams to attempt once you trust them. Yeah.
I had a really interesting scam attempt. They posed as potential sponsors, and it's very clever the way they did it, because they sound very agreeable to everything, including pricing. They say they want to do a long-term deal at a fairly good rate as well. So they're appealing to your motivation and hoping that you could trust them. And so we had a call, right?
Yeah.
And then
Oh shit.
in the course of that call, they tried to send me a link. That link would have taken over my device, and of course, I didn't accept that link, right? But as soon as I pointed out what that link was designed to do, they went into a bit of a panic, and so the call ended not long after that. Yeah, yeah, it was very clever. They had 5 people on the call, right? So it looked like a group chat sort of thing with an organization, different departments and whatever. But nah, it was a scam, right? It was a scam attempt, at least. And I can see a lot of people falling for that. Absolutely.
That's
Especially
very
in
high
farming.
resources, hey? It's the opposite from farming. It's like very targeted with
Very
very high
tight.
touch. Yeah.
Absolutely ruthless. And because like they would have gone through that many times with other people, they know all the angles, they know the resistance, the objections. It's kind of like a salesperson, right? You're going through the same process over and over again. So all the questions that are going to be raised by a prospect, and they plan for it, and they know psychologically how you might respond. So it's really, really, it's nasty stuff, and they'll absolutely ruthless. They'll take you for everything, like without any any hesitation. They'll take you. Yeah, it's nasty.
It makes sense. Now I know why. I guess it worked, say, the reporting scam. I had another person pose as a notable character, as a professor of economics or something that wanted to have a conversation or something. Um, I think my reply was, "Oh, why are you so?" I said, "How's the wife? It's been 2 years since we had dinner in New York. How are things?" Um,
Oh yeah. Okay.
yeah, and they didn't reply.
Ah, bit too specific, right? Yeah.
Yeah, yeah.
You just plant.
Um, I just scammed them, think I was good friends with them.
Yeah, yeah,
Yeah,
yeah.
too hard, and they moved on. But yeah.
How you dealing with the fame of Bitcoin? Your profile is quite. It's it's huge in Bitcoin, right? So I noticed that during the bear market, you almost became, not reclusive. You're obviously living your life, but in terms of a public profile within the Bitcoin space, you kind of disappeared for a while. Um,
Yeah, I
was
mean,
that?
I really enjoyed the exposure, and I actually quite enjoyed doing the podcasts and so forth. But there was also the end of COVID. I had my first kid, and then we had a second, and we were traveling as well. We did a world trip after lockdown stopped us for many years, and we're a bit of a traveling family, and so it's very hard to like. I just didn't want to actually. So I basically turned off all podcasts and I stopped everything actually. And I was also starting a new business, so that took a lot of my bandwidth, and so I just dropped off the scene. And actually, through that also, I was like, it's kind of nice to be a less exposed, because like you can't come across people in the random, and I had it many, many times. We're like, "Are you Willy Woo?" And I'm in some new place, or it's like, it's not, it's good, but it's also, I think, these OPSEC issues. I just, I don't know. So I think like, I think about an Antonopoulos, Andreas Antonopoulos. I don't know if this was before your time, but obviously he was the kind of one of the original OGs. Like he was in the first chapter, early days on Bitcoin. Um, Bitcoin sort of, I forget even the name of the podcast, the very early podcasts, and then he basically wrote books and became such a super uber educator and one of the top accounts. And then, if you recall, he had a conversation with Roger Ver on Twitter, and Roger Ver gave him shit because he didn't have lots of money, and he then wrote this whole blog of how when he went into the rabbit hole of Bitcoin, he did not eat. He lost 10 pounds or something. All he could do was read nonstop and research Bitcoin, and he had to support his mother, and he stopped his contracting, and basically any Bitcoin he bought, he had to sell to support himself, and he was effectively, Bitcoin broke. And um, upon posting that blog, people started donating to his, donation because he had a donation address, for the work that he was doing anyway. And I think 50 Bitcoins landed, mainly from one person who obviously had bought a lot of Bitcoin, probably through his education. Um, and so, it amounts to, even back then, I think it amounted to, it might have been $1 million. And so, and then not long after that, he just disappeared off the scene. He just disappeared off the scene. And I was like, that, and if you remember Antonopoulos, he's a security researcher, and then suddenly my thinking is that this is not I'm too public, and then he had to basically tell the world, hey, no Bitcoin, and then after that they sent him Bitcoin, and then after that he disappeared. And, so, and then
Yeah.
you got to think about this as even like him as a security researcher didn't think about this until his account blew up and he tried to reverse it. Um, and then now you've got to think about it because you pan forward 15 years and when Bitcoin's $10 million, it's like, oh shit, that Archie guy, he had coins back in 2025, back when it was under $100,000.
It's going to be like that, right? I mean, it really is. Just like we look back at people who harvested those Bitcoin faucets, right?
Yeah.
Um, you
Five
know,
Bitcoins per airdrop, it's
I
crazy.
saw one the other day that said it gave away 50. Like, sure,
No, really? A whole mine block. Wow.
like surely not. I don't know, but I do recall those even, right? Like I heard about Bitcoin very very early on, but I just considered it kind of like this startup sort of technology hadn't really proven itself. I think it was 2011 or 2013 that I heard about it, right? So and I don't regret not buying because that's just life, and I don't really get jealous of people who did buy early because they took the risk and they deserve that. If you take a risk in life, you deserve the benefits if it pays off because it could well have failed, just like all the previous attempts at internet money, right? So
Look, I was like, it was 2013, I heard about it, and I thought, well, shit, if this takes off, it's going to be worth a lot, because I just did a really quick thing. It was like, what if it takes over gold? Because, MP3s had
why,
taken over.
what made you even ask that question? Because back then it was just one of dozens, hundreds, thousands of attempts at doing something like this, right? But what was it about Bitcoin when you heard about it, when you knew enough about it that made you even make that comparison?
I didn't go deep. I was just my lead developer was like, said this is digital gold, and I was like, okay, so it's internet native digital gold, and I just assumed that it would work. It seemed pretty clunky, but I'd also used to rip my CDs into MP3s, and that was really clunky. And then I saw how that turned into the iPod, and then digital music took over the world. And I thought, if this same thing happens, it'll probably take 12 years from now because it's still really clunky. But I know that if I don't buy at least one Bitcoin, and back then it was like $600 or something, it was coming off the Mount Cox pop, and I was like, I am going to be really pissed off at myself if this thing goes to $500,000. I mean, it was $600 in my face. So I just said, I need to buy an insurance policy from me being pissed off with myself. And so I'll buy $600 of Bitcoin, which was one Bitcoin, and I walked out. And then I'll forget about it. I'll store the key somewhere, and I'll carry on. And that was the so unlike most people, it's like, it's not going to work with that, or what's a few $100, and I've never been averse to risk, because I was in startups, startups are like 1% chance of success.
Yeah, yeah.
So yeah, so it's like, and also you just see how tech started taking over everything, and I figured it had a fair shot. I figured it had, you know. It might not have been back in 2013. I didn't do much research, but even if it had 25% chance of success, um, a 500, 1,000x on a 25% chance of success, it's just, why not make that bet
Yeah.
over and over again, so yeah, I mean that was, but I only just bought one Bitcoin and walked away. It was many years later till, well, maybe a year later till I started going down the rabbit hole and researching it. That's what most people should do. They should just go, well, shit, just buy a tiny little amount and put your foot in the door, and don't put much money in until you've done research.
I went the other way. I I Yeah, no, I got into it as a trade because I thought I've seen 2 bull markets go up and down, and I thought after 2017, I said, "If this thing doesn't die in the next bear market, it's here for good, and so I'm not gonna miss the next run. I'm not gonna miss that." So I got into it as a trade. So mid-2020, I started seeing that, okay, there's a baseline here. It's coming out of the bear market, and I just wanted to sort of wait for confirmation. And I think around October 13, 14, just as it was rising, I bought some.
Oh, perfect
Within,
timing.
yeah, within 6 or 7 weeks, I was all in, everything I had. Yes, and then it was only later that I got into the economics, Fed policies, all that sort of stuff. Because for the longest time, I was like, why the fuck are these house prices still rising? We haven't had a recession in 30 years in Australia. And it's like, it just doesn't make sense, right? None of that made sense to me. And, I wasn't really active online in seeking communities discussing answers to that sort of stuff. It was only through Bitcoin that I found out about all that. And I've got a traditional business education as well, right? So I studied micro, macro, all that sort of stuff. I've got a major in finance. I've done all that stuff, right? But they didn't teach us any of that shit. Yeah, if anything, it was like a distraction, right? What they taught us didn't give answers to any of the questions that I had, and if anything, it was an outdated way of telling us how financial institutions work. Like, they, when I did my business degree, they were still teaching us that banks took money from savers and lent them out to borrowers, and that's how credit was created, right? And it's like, yeah, maybe in the 1800s. Like, come on. I mean,
No, not
And,
even then.
yeah, I won't name the university, but, it's a fairly prominent one in Australia. It's, I wouldn't call it top tier, but it's like, pretty good on the second tier of universities. And, that's what they were teaching. And, so when I looked around and I'm like, "Man, I've saved up a bit of money. I think I've got a deposit for a house, and I'm waiting for this correction that just doesn't happen." Like, we have a recession and the housing market stays solid, right? Well, it wasn't a recession, but let's just say the economy softened, or, even after 2008, for example, nothing happened to house prices, whereas they should have crashed, and they didn't crash. They didn't crash. House
Well,
housing
they recovered very quickly, but there was a decent crash. There was, yeah, no, and in America it was definitely, but even in New Zealand, it pulled back a lot. Because I remember trying to sell my house during that crisis, and it was very hard. It was the prices pulled back massively. And I was wanting to sell the house because I wanted to get out of the New Zealand dollars because the US dollar was looking to get really strong. And yeah, of
How long did
course,
that last,
that
in the housing market?
what's that?
How long did
Well,
that last?
it was only like 6 months to a year, and
Okay.
so you won't actually see it. Most people wouldn't even see it because housing market's so liquid, particularly in those types of times. It might take you a year to sell a house, so it's not
Mm.
like you have a ticker that prints every minute like Bitcoin every second that measures it.
Yeah.
And of course, everything happened. Of course, they injected liquidity and everything pumps. So yeah, yeah.
So, like, my recollection of a recession is 1990 in in Australia, right? That was a legitimate recession. Housing was shit, unemployment lines, like, every day in the newspapers, they'd have images of people lining up outside the, unemployment benefits office, for example, because people just couldn't find work. We haven't had anything like that. Like, that's my idea of a recession, not just a couple of quarters of contraction, for example, and a little bit of softening in the housing market.
Yeah,
Um,
that's because the Fed. Let's say that I think it's safe to say it's the US Fed because everyone else copies has to really.
well,
Um,
they're compelled to, really, right? The United States almost sets, you know, um, policy for everybody else. Every major economy has to follow, otherwise they're at a competitive disadvantage.
that's right. Like the currency goes haywire relative,
Mhm.
and they can't export. And so um, after the dot-com crash, there was that crash in particular. Um, they didn't let it crash, right? They kind of saved it. They lowered interest rates, liquidity got injected, market started to recover very quickly. That led on to the housing bubble. They led on to 2008. They injected liquidity again. COVID happened, they injected liquidity. So basically, from the start of this century, let's say, to year 2000 and 2000, around dot-com crash, there shall be no depressions, recessions. We'll just print money.
I reckon it started even before that. I think it was long-term capital management. I read a book about that, so at the time, I didn't really understand what was going on, but I read a book about it a little bit later on. And for me, like, those guys pioneered financial engineering, and it sort of, rather than learn a lesson from that, I think what Wall Street did was look upon them with envy, like, "Guys, how the fuck did you do that? Come over here. We'll pay you big bonuses, and if you teach us how to do all of that." And I think it was a similar thing with Enron as well, where Enron was really pushing the envelope after that. So the way I joined the dots was long term capital management, Enron, 2008. I think the seeds of 2008 were planted between long term capital management and Enron, with the financial engineering going mainstream onto Wall Street, and then they use that to absolutely screw everything up. And what's happened since then, the way I read it, and perhaps I'm wrong, is that it's gone from Wall Street and corporate risk to now sovereign risk. And after sovereign, there's nothing else. It's just going to be a collapse after that. So, like, I don't know what happens to the entire system. Does it all reset, or collapse? I don't really understand the consequences of what will happen. But I'm glad we have something that can hedge against that. But that's how I join those dots, because I think it's essentially what's got us into trouble is the financial engineering taking over and financialization of the economy taking over and precedence of everything. And inevitably, whenever those things go to excess and collapse, it's been the Fed coming in to prop everything up as a result of that. Interested in your thoughts on my reading. Do you think that's a fair connecting of the dots there?
Well, I think I think maybe since the 90s it's gone absolutely crazy at what you can do. But I think it's always that game's always been there. Um, like I mean, as much as like you go back to like Roman days where you could like debase by changing the metal content. These that's financial engineering from Roman era, you know. So I mean, the game has always happened, and we go through periods of expansion after an collapse, and then this the silly business happens, and then we get collapse again. So, and obviously, we're in a very interconnected, very modernized, we're very digital, very fast, and complex. You like, I think it's really only last 100 years that we've had very, very complicated derivative instruments and ways to price it, and so the machine's very, very complicated, and that means that you can do a lot more complicated engineering. So,
Yeah.
you know, it's just a trend, and it's reflective of the technology world in the 21st century.
Why do you think the Fed got into the habit of stepping in rather than letting people eat their own cooking?
Because you can make a lot of money if you're sitting on top of the money printer. Um, like, my understanding, I'm not an expert, but my understanding is that Um, you have a sovereign country, and well, let's go back a few centuries. You have a sovereign country, you like to wage war, you like to dominate other countries, add to the empire. War's expensive business, you have to borrow it. You're not good to on that debt. You used to sell war bonds. Um, and eventually the people who had the money, the rich merchants, said, no, we're not going to lend the money to you. Um, you're not good for it. And so they're like, well, we started to introduce a claim on the taxation that the state could levy on the population as a way to pay back the debt to cover the war bonds. So effectively, you get in a situation where um, I think the amalgamation, the ability to go to fiat is really because it's not a government thing, right? It's private individuals that have the likes of JP Morgan, the big privately owned banks is the Fed, and they are taking control of the money. And like the incentives are to make a lot more money, right? And so if you're sitting there like if you're a JP Morgan, why would you want to allow the thing to collapse? Like you're making great money with the existing system. The whole thing collapses or detoxes. Maybe that's bad for your bottom dollar. Um, but there's no incentives. The people in control are doing great, and if it collapses, pretty sure maybe the Fed need system gets reset, but the money that's been taken through that system still is in the hands of the rich and powerful, and I'm pretty sure they're pretty protected.
As
The wealth
always, as
there's the
always.
wealth there's protected, and then there's a new system. You got the wealth, and So I don't think there's any incentive, actually. I don't think there's any incentive. The only kind of hope that I see right now is you get like a leader like Trump who and who's there really to break down a lot of the corruption that's in the system and in America. You see that with Doge. You see he's pro a Bitcoin strategic reserve, but more than that, he's pro well, he's gonna do a sovereign wealth fund. Bitcoin's very likely to be in that. Um, I think suddenly you get into a situation where you maybe monetize the sovereign wealth fund. You can use that as backing. You can, I think through the process, I'm not an expert, but like I think through this process, I can see um, there's going to be less control. There's more financial inputs coming from the actual government and not the Fed. And I could see the Fed being depowered if the right moves are made. Um, so, but yeah, ultimately, the Fed's not the government. Central banks aren't the government, and I think that yeah, I just think that like if we don't run off a cliff, it would have to be people that are like coming from the current system to kind of shut this down. I mean, like we think we're going to run off a cliff, but like actually now Bitcoin is touted as this thing that can save the US dollar and monetary dominance. But
At
yeah,
least at
definitely,
least
yeah.
enforce some discipline on the policies that are exercised by federal government and Federal Reserve, because it gives people an option, right? It gives people an opt out. Um, whether or not those policies change will be interesting to see. I'm not sure they will. I'm not sure if we have a correcting mechanism for policy yet, but at least we have an opt out.
We can save in Bitcoin, and it'll become a lot more stable and a lot better for saving in. And we can measure, obviously, we can measure the price of houses against Bitcoin, the price of everything against Bitcoin. So yeah, as a measuring stick, because we
Well,
don't
that's one of
have.
the really empowering things of Bitcoin. It's like prior to Bitcoin, if you didn't have enough money for a deposit on a house, you were locked out of the primary asset that could be a hedge against monetary debasement, which is really, I mean, I know a lot of wealthy people buy art and wine and other collector's items, right? But most people are locked out of that. If you don't have enough money for a deposit on a house, you're not even thinking about buying art and wine and watches and things like that. But Bitcoin allows you to even, just whatever you've got to put it into Bitcoin, and that can act as a sponge or a hedge against monetary debasement. Whereas prior to that, if you didn't have a house, you had to hold on to your cash pretty much because what else could you do with it? You're going to gamble on the stock market and take more risk, and inevitably, most people lose out doing that. Most people don't
Yeah,
know.
I can tell your Australian UK roots. New Zealand's like this also. I was going to say post 1971, we haven't had money. We've only had currency. The separation of like we talk about separation of money and state. In 1971, we had separation of money, store of value, and medium of exchange. So we use currency to buy stuff, but um, money was then a hybrid. A hybrid sandwich between store of value assets and then converting that hopefully in a liquid way to money to then spend. And so for two generations, we've had at least two generations, we've had the S&P 500 as money. And in Australia, New Zealand, UK, it was real estate. But the problem with real estate is terrible because real estate's a Ponzi um, because people are putting it in. See, real estate, people aren't just buying real estate like they're buying Bitcoin. they're buying real estate on leverage because, as you say, you can't afford a whole house to start with. So you basically, back in the day when I first bought my house, it was you could actually borrow 90%. So it was 10x leveraged on real estate. And that looks great because if real estate goes up by even 5%, you're getting a 50%, 50x gain minus my interest payments or whatever. But um, it's it's high leverage and highly illiquid. And then you got Australia, New Zealand, UK very much in the real estate way of using real estate was the store of value for the money, not very liquid. So, you might we'd have this thing called a revolving credit line, which is basically using your house as collateral to borrow fiat to then spend, right? Um,
That's
and,
essentially what happened from the mid to late 90s onwards, and boomers never had it so good.
and then now you compare that to something like the US, and the S&P 500 is the money, which goes up 10% per year historically for decades and decades. Real estate, I think, is a bit under that, but highly liquid. As long as you hold the S&P 500 and weather the ups and downs. The problem with the S&P 500 is you can have you get the minute by minute ticker, and that leads you astray. You can actually see it drew down, 35, 40% in, COVID
Mm.
shock, um, where most people are oblivious to the real estate crashing and then
But also, like
pumping
you
up.
said, you can leverage real estate quite safely to juice up your returns. Most people can't really do that to any meaningful extent with shares, right?
Yeah, it's because real estate is a really, really, really shitty collateral. This talk about Bitcoin as the pristine collateral, um, that needs to be expanded on. Bitcoin is the pristine capital if you're the lender, because I want to be able to liquidate that dude the minute they're in the red. And if I take a house as collateral, that's shitty. It might take 3 months in a really bad bearish market, like when that house is plummeting in price, it might take a year to sell. I can't actually liquidate this guy. So then, you know, like that's the best collateral if you're borrowing is the shittiest collateral, right? And real estate is that, and so that's why people don't
Let's
get
just expand on that.
foreclosed.
Let's just
What's that?
expand on that form. Let's just expand on that formula because you touched upon something really interesting in the evolution of Bitcoin. Because quite often, as Bitcoiners, we talk about Bitcoin as if the future has already arrived, right? And it hasn't, right? Bitcoin will be pristine collateral, and the apex asset and all the rest of that. But as you alluded to, so at the moment, if you're a borrower, you can't really borrow all that much against Bitcoin, and it's not going to be at a very good interest rate either, right? That doesn't sound like the lender really loves giving money against Bitcoin right now. But we think we're projecting sometime into the future that's going to
Yeah.
change.
Well, and it's actually, well, it seems like that, Archie, but I think the lender would love to do this. But remember, we had SARB 121 where the bank could not custody the Bitcoin. Therefore, they couldn't take it as collateral to lend against. Now that's been repealed. And now we've got Cantor Fitzgerald, I think, have committed $1 billion to lending. We've got Zapo Bank offering up to $1 million now. So that is changing very quickly. They always
Okay,
wanted to do
what are
it,
their
they just
rates?
weren't allowed to.
What are their rates on their lending?
I haven't checked. I imagine it's
So
high because
I'm guessing it's going to be at a higher rate than if you're borrowing
absolutely.
against the house.
Because currently the borrow rates are what, 12% or something? Well, that's what the market's supporting. But now that we've got TradFi money coming in, that's going to come down to 6% very, very quickly.
Oh, you
Um,
think so?
yes, absolutely. I'm borrowing at 6% on my Bitcoin.
How?
Because my
Okay, how
Bitcoin
are
is
you doing
my
that? Do you
Bitcoin
mind
is in
if
a
I ask?
wrapper. My Bitcoin is in a wrapper, and that wrapper is called MicroStrategy. And MicroStrategy has had decades on the stock exchange with a good balance sheet, and you get a very good LTV, and it's a standard equity. It's I'm borrowing as equity as my collateral. Like people have been doing for eons. Here's my stock in Microsoft. Here's my stock in Google. You can take that as collateral. It's very good collateral. You can liquidate it within a minute.
And you think that
And
that situation will come to direct lending against Bitcoin soon?
yeah, it'll take some time because until that 1 billion turns into tens, hundreds, a trillion, wanting to get that kind of yield, um, until that comes in, then I would say within crypto markets today, there is probably north of $10 billion of US dollars that is in there looking for yields. It could be 20 billion, but I think it's about, and at least in the hedge fund world, there's $10 billion being put to work, is my estimation, to get yield on US dollars. And and the way it looks is that this money is being lent into, and the lenders are kind of more crypto native lenders, and they're lending their liquidity into prime brokers who are then lending it to hedge funds so they can leverage up their arbitrage trades. These $10 billion of capital in there. And then so counterfeits, and if you're doing that, you're getting, I think the PBs will be getting, those guys probably getting 10 to 14%. I don't know for sure because it's all kind of dark pooled money, but it's roughly that. And then the hedge funds are getting anything from 10% if you're a shitty hedge fund, 50% annualized if you're a good hedge fund. Like as in you really know how to get the alpha in the trades. So they're happy to borrow at 10, 12% if they're going to make, say, 30% in their trades. So anyway, all of that to say let's say there's $10 billion of money that's being lent into the space. And then Cantor Fitzgerald's allocated a billion. Well, the interest rates ain't going to drop by much. But say $10 billion comes in, then that's going to make a difference. And say $100 billion comes in, and then, whoa, the rate's going to plummet because they're all going to be a race down to the risk-free rate of US dollars. So it'll take, some time, maybe, 18 months. Let's
That's
see.
that's an interesting. That's a really interesting potential development because we saw essentially the last bear market was a catastrophe, of rehypothecation of Bitcoin, right? With and there was really no accountability. It was wild, wild west, and we saw a whole bunch of, I guess, fraudulent activity happening and lack of risk controls and all the rest of that. So basically, anything that could go wrong essentially did. And so, are we just going to now see traditional finance, Wall Street, come to employ those same practices in Bitcoin? How can we mitigate those risks this time
Well,
around? Because the
well, I'm glad
history of
you asked, right? Because that's what I'm investing in.
okay, oh,
But
interesting. Go ahead.
right, because right now, I'm interested in is investing in the next generation of Bitcoin infrastructure providers. Right. And that I think that's a very good business to be in, to invest in Bitcoin infrastructure. Um,
What
and
constitutes Bitcoin infrastructure?
well, back in the day, like so, I invested in, like I think my first investment in the space was Exodus Wallet, which was the first really good user. It was like the Mac experience. Back in 2015, the wallets were terrible, but then Exodus came along and they were like, this is like a Mac experience. It's like everything works great and it's user friendly. And the co-founder worked for Apple, and so they made the wallet experience, and they turned into a multi-asset wallet. I think there's hundreds of assets now, but that was my first. That was an infrastructure investment. But I've also invested into Debify, which is using multi-sig to broker these loans, right? And so the lender has a signature, they have a signature, there's another your third party signature, and then the one that's borrowing has a signature. So those the bitcoins when they get posted, if that those bitcoins are hypothecated, meaning it's being sent off to someone else to trade, or and then that person's sending it to another person and it ends up in Alameda's hand, right? Or whatever, and just
Hmm.
doing degen shitcoining, you know, that stops because you would need your signature, or you'd probably need like at least three. You need the lender to sign off on it. You'd need Debify and a third party um, to circumvent your signature. You know, so those coins aren't moving anywhere. And if they move, you know that something's happening with it, right? And if it's not a liquidation event, that's a legal thing you can take. You can see immediately because that's not in our contract. When we were in 2020 cycle to 2022, where it collapsed, people like BlockFi, all these guys, you can read these websites and what they say they're going to do, and they tell you exactly nothing on what they're going to do. There's no promises, and they were absolutely, basically, they were they were when you're entering a securities contract, where they can just take the coins and like, so what they were doing is they were selling you securities. They were promising a yield. They would then ship that off to third parties, and they didn't have a brokerage license, which is very illegal. You can't just sell securities like, hey, Archie, I've got this company. It's going to do great. It's going to be $1 billion company. I'm selling to you for $1 million today. You want to buy it? Right? That's what it is like to sell securities. Anyone can sell securities. You can't. You have there's They worked this out a century ago, right? You can't just go up the street and sell securities, and that's what BlockFi was doing. And the securities law is that these are the rules you play by. Oh, if you're going to rehypothecate, you've got to do disclosure. You've got to disclose to the person who owns that security every single thing that you will and will not do. And it's on public record, massive disclosure. This is why a publicly traded company is like everything. Just download it off the SEC website, every single thing they do. If MicroStrategy is going to buy Bitcoin, it's not it's going to tell you beforehand. They can't just buy it. They basically have to tell you so the whole market can front run them. But that's because they have to. These rules stop people from scamming. And so anyway, like this next generation of lending products will be absolutely, the DeFi way, that infrastructure will be, and I believe will be used by banks, and also banks will use, institutional grade custody to hold, and they have to abide by the regulations of custodians and banks, and so it's different. It's become TradFi levels of disclosure. We've been told TradeFi is really bad after 2008, but um, actually, as we've seen, um, crypto is worse. Actually, there's a lot of crypto that poses to be, decentralized, but it's not. It's unregulated entities behind it doing whatever they want. There's not even regulations. What happened in 2008 was a dismantling of very good regulations so that people, bad actors could make a lot of money as those regulations got dismantled. Um, and so, but this, custody, is pretty tight. Um, so anyway, I think that the 2022, and certainly with Bitcoin, it's not going to happen. We've got multi-sig, and TradFi's, going to come in a rush to lend. Well, if the rates are like, first. the rates are like 12, 14% right now, and they're happy to lend at that because right now they're lending at 6%. And then after that, they're going to be happy to lend because it's such great collateral for them to liquidate you.
Yeah.
It's like, and like when you're, a house is shitty, it's very shitty collateral. I, I think the mortgage rates must be higher because of that. I don't, I have, I don't, I'm not in real estate, but would you know what's the rate of real estate loans versus, say, a Lombard loan against equity?
I haven't looked into any kind of financing for at least 10 years. Yeah. Yeah. I my whole point right now is to just generate cash and live on that basis. I don't really have a need for owning anything, but that will change. So I haven't really looked into finance, and I'm happy to do this for a little while yet. But there will come a time when finance will play a bigger role in my life, and hopefully we're better positioned to take advantage of that.
I think it'll be a thing, though, that Bitcoiners will be heavily using banks in financing,
Hmm.
ironically, because they want to put their Bitcoin to work. Like,
Yeah.
say you've got $1 million or $10 million of Bitcoin, you're stacked for 5, 10 years, and you know, you can
I actually
now.
think Bitcoin backed loans are lower risk when used to buy a property that also acts as a collateral,
Yeah,
because you've got the benefits of both.
yeah, you
Where
use you
Yeah.
use your Bitcoin appreciation, but
Mhm.
basically you're shorting fiat in a non-gambling way, where, like, not like putting in an exchange. You're fronting collateral to borrow dollars to buy assets that are appreciating, uh, against fiat, which is going down. So you're basically shorting fiat. You're buying something
Yeah,
that's going up
but you're
against
doing
fiat.
you've got exposure, you've got double the exposure to the upside, right? So from a borrower's point of view, you still hold on to ownership of your Bitcoin, and you acquire ownership of a house for the debt of the price of the house, right? So let's say you've got $1 million house and $1 million of Bitcoin today, right? If the bank, let's just say, it's just hypothetical, the bank says, okay, we will take both the house and the Bitcoin as collateral, and we'll give you $1 million. So they've got $2 million worth of collateral now. If you don't make a payment, they will say, we will liquidate Bitcoin at the price of your mortgage payment, the price of the date of your mortgage payment, to bring you up to balance. And you're like, okay, great. What's the downside? Right? There's no downside to that. Literally, while you're holding your Bitcoin, which you're doing anyway, you've also got a house.
Yeah, what I think is a pretty good product to do is, I'm kind of working on it. Is, how you can get yield on your Bitcoin?
I don't know how you can get yield on your Bitcoin, but I've heard of people getting yield on their Bitcoin, but I don't know how it's done.
Well, these earn products are really kind of like securities. They are securities. Let's be real. So when, Gemini did their earn product, they would send the US dollars or the Bitcoin, to, undisclosed, um, undisclosed entities. Gemini went to Genesis Trading, which was, the big, multi-billion-dollar trading house, and then they ended up sending it to Alameda, and then boom, they lost the money, right? So that was selling to retail securities without disclosure, without brokerage license, without all this sort of stuff. Um, so if you're really wanting to do a interesting Bitcoin product, like, to buy a house, and so you're going to have a lot of Bitcoin, therefore you're going to be, um, a qualified investor, um, then they would be eligible to buy into a hedge fund. Now, hedge funds are compliant to all manner of regulations, and they have now, do a hedge fund. This was all worked out in the 90s, right? With when hedge funds, like the days of Madoff and all this. There's, all right. Number one, the accounting. The accounting is done by a third-party fund administrator. They are overseeing every single trade that the hedge fund is doing, so that the reporting comes from someone else. And then every year you get an audit over everything. Um, and then the whole thing is open to due diligence. You can send a ODD provider, operation due diligence provider. You can go through a fine-tooth comb of how every single thing is done. How do you value these assets? Who has the keys or signatures, the bank accounts? Who are the independent directors? Which jurisdictions, and you can just go down, 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 all the ways in which, through malice or incompetence, this hedge fund can lose money. And that is you can fully diligence a hedge fund like that. And like, it's not like you can go to BlockFi and say, I send a guy in and I'm going to see all your operations. I want to see you don't do that, right? So there's all this regulations around these hedge funds. And, so the thing is, you can, 'cause we run hedge funds that generate yield, right? And the trade is arbitrage, right? It's like mispricing the market. You take that one trade, and you make a tiny fraction of a percent, but you do that over enough minutes of the year, and then adds up to a 30% yield or whatever, or a 10% yield. For Bitcoin, you should be able to get a pretty much a 10% yield annually doing that trade. You wrap that into, well, hedge fund is a share. You buy a share in a hedge fund. That's an equity. Now the trick is, can you make that equity collateral with a bank? If you can achieve that, then you're basically buying Bitcoin shares. Um, Now you're a Bitcoin OG or maxi hodler, and you say, I don't want to ever give my keys out. But if you're going to borrow money, you're basically signing off your house to the bank. They can take claim of it. So if you actually want to borrow money, you would then sign it off to the bank and let the bank custody the shares in this hedge fund, which is now generating 10% return. Um,
Mm.
and then you're borrowing, Lombard loan rates are around 6%. You're borrowing at 6%. And the LTV of maybe 3 to 1. So for every, so say you got $1 million that you want to borrow, you have to front $3 million of Bitcoin. You're making 10%, so you're making 300,000 per year of gains in the yield of that in your security, which they have as collateral. And you've got to pay an interest rate of 6% on 1 million, so 60,000. $60,000 is your interest bill, and you're making 300,000 per year. This is putting your Bitcoin to work. Work it all out, 3 to 4 years. That $1 million you bought a house with it is paid by your Bitcoin. That's the cool product.
It does sound complicated, though. I mean, a lot of people they want a two-click solution. I'm clicking to give my Bitcoin as collateral, and then another click to get to get the cash that I want to borrow. Right? You know what I mean? It's like, and what's under the hood, as you've described it. Okay, if it generates those yields, everything's secure, audited, everything. People will be interested in that. But how do you present it to a user in a way, or a borrower in a way, that they can understand through the traditional paradigm of borrowing and lending?
I mean, it's not really a retail product, right? For starters,
Okay.
like you cannot sell a security like this to retail. And the bank that's going to take his collateral is not a retail bank, it'll be a private bank. So it's very much for this generation of Bitcoins. It's like if you're stacking Bitcoins, you wait another cycle until it grows enough to the point where you can put it to work to buy a house. Um,
You think
and
another 4 years before the industry matures enough such that they're offering retail products?
No, it's not about retail. I think it's really predicated on the Bitcoiners that are buying now. In 4 years, the amount of net worth that they amass will be able to be put to use in these products. That their Bitcoins today will buy them a house tomorrow without ever having to sell up their Bitcoins. It's, and any person that comes to me and says that's way too complicated for me is like, sure, then you don't want this to have a free house.
Yeah.
All right. And it's actually a lot easier than working out all the DeFi. You tried DeFi farming and doing all that stuff.
I stayed
It's
away from all of that.
completely complicated. It's completely complicated. And every step of the way you can get rugged. This is like you ring up your bank. I want to buy this share and I want to borrow against it. Okay, done. You talk to someone, you send them a WhatsApp message, you know, that's how banks work, right? It's very human and very easy. It's actually
Well, we've
um,
got two things happening at the moment, right? So Cantor Fitzgerald with their $2 billion fund, which is essentially a starter, right? So Howard Lutnick has said, this is just a taste of what's to come, right? And then the other one, which is the, I don't know if you call it a repeal, but SARB 121, is that the there was a
yeah,
law or
121 was repealed, 122 has replaced it.
yeah. So, and that was preventing banks from custodying, holding Bitcoin for their
Hmm.
customers, right?
Hmm.
So now we've got the seed of a lending fund, and we've got banks who can now custody that. Like, what are we waiting for, do you think, before banks say, we'll not only hold it for you, but we will lend against that? Do you think that's like an imminent thing about to happen?
Well, it's happening, right? So the Zapo came out. You posted it actually. Zapo came
No,
out
no,
with
no.
one with,
So I know, I know, but they're a Bitcoin financial institution, right? So I'm thinking more
but they're a
mainstream.
bank.
They are a
Zap,
bank, yeah.
Zapo Bank, right? So of course the ones that are like most comfortable with it will do it first. You can do it with Signum Bank. I think you can do it with Amina Bank in Switzerland. Um, I mean, you've been able to do that for a while with those banks in Switzerland under Swiss regulations. The question is, when does it happen for US banks? And it started, and $1 billion's been set aside by Cantor Fitzgerald.
Two.
So it'll
I
just
think
take,
it's
is it 2
yeah.
billion? Well,
Mm-hmm.
then it's going to take as as soon as they build all their infrastructure, their like internal, how quickly does a financial institute, how quickly can they gear up for this, you know? And so I give that, I mean, it's starting now. I'd say the next year we're going to accelerate into this.
You know, I started this account in 2021, early January, and I was going back and having a look at some of the tweets, you know, because of a lot of the financial institutions are getting back in the game now, and I see some of them had already set up teams back then, but I'm guessing that a lot of what they started in 2021 was sort of stopped because of the bear market. They were scared off from the bear market, and then from the ramp up in, I guess, the antagonistic posture that the Democratic Party took up after 2022, they really ramped up that. Once their golden boy was taken away in handcuffs in SBF, I think the hostility from the Democratic Party ramped up significantly, and it's only with the new administration that they've been unshackled and they feel free again to pursue what they started in 2021. So I'm not sure that a lot of the initiatives that were started in the last bull market cycle by banks were seen through. I know Commonwealth Bank, for example, that you would know in Australia, that's
Mhm.
Australia's largest bank. Um, they were going to make it available through internet banking. You know, you could buy Bitcoin, and then the bear market started and they recanted, said, sorry, we're not doing that.
Um,
So
yeah, I mean, it was, choke point 2.0, like during the Silvergate, Signature Bank, they were the two banks that banked
Euthanized. Absolutely, they were
Bitcoin.
euthanized. Yeah, they
Yeah,
were
they were
viable
absolutely, yeah,
banks, and they were put down because of their friendliness to Bitcoin and crypto industry.
yep, yep. And it
There has to be
was,
some legal consequences to that, right? You can't just run a viable business out through I guess the regulators did that, but it was a concerted effort
yeah,
to really do a 1-2 punch for the crypto industry,
yep, yep. I mean,
and it's
I would like to see people held to account. I mean, they destroyed a very successful bank, two of them, and so it's,
and you know what? None of that makes sense to me. I've thought about it, and I'm like, why would a Democrat so hostile to Bitcoin and crypto, the industry? Why were they so hostile? And it doesn't make sense. They had nothing to gain from it because Wall Street wanted in on the game, right? So it's not like Wall Street was saying, "Hey, we don't want this other industry on the side here getting away." They wanted in on the game, and they were prevented from getting in on the game. It doesn't their hostility just doesn't make sense to me. The only thing I can think of is there was a cultural antipathy towards, the crypto bros sort of thing, right? And, the culturally, there was a bit of a clash between the Democratic Party and crypto in general. Because otherwise, I can't see anything that they stood to gain.
well, the Democratic Party of the recent decade has been like a control communist state. And so they had blanket control over the media. They had blanket control over social network until it got transformed into X under Elon Musk. And then with that, you saw all the shit they could literally just post an order, to Twitter, and then they would censor. And if you think about money as a censorship mechanism, and they were absolutely weaponizing the banks and debanking people that were that weren't they were a danger to the Democratic Party. They would do so. So what do you think they would do to Bitcoin and allow that industry to prosper? Why would a communist party, the Democratic Party being communist in the last 10 years, be pro Bitcoin?
Well, their leaders were happily capitalists in trading the market on inside information.
Yeah, yeah. I don't call that capitalism. Chromie capitalism. What's it called? There's a term for it, right?
It is crony
Um,
capitalism.
it's
It's a form of
it's
capitalism as well, right?
it's
So you're
raping
like,
and pillaging
yeah,
financially
absolutely. Yeah.
the nation state, which is somewhat communist. It's the animal farm, right? It's the ones that lead the farm are farming the whole country. So yeah, no, I can see why they'd be against it. Absolutely.
Again, okay.
Yeah.
I still think it doesn't make sense. They shot themselves in the foot. I think prior to 18 months ago, the industry was disorganized, and they didn't count on, foolishly, they didn't count on a very wealthy industry being able to make such an impact politically in such a short time.
I know.
Because what was it? What's the pack called? I can't remember the pack. But the entire industry united behind that, and I'm not sure I've seen such a huge swing in political momentum affected by a pack that was just formed. It's such a short time, very, very effective. So whoever put that together, and the entire industry ought to be very
Look,
proud of them.
I think it was, I was one of the maybe few predictions I did well was 3 years ago before the Trump um, election was winning the election was saying that 3 years from now, shitting on Bitcoin will be political suicide, and that was actually not from anything other than the adoption trend. And you could see the rate in which it was adopting and compounding users, not dollars. How many users of Bitcoin was how that was compounding, and it got to I figured the next US elections, this is going to be a significant vote. Um,
Yeah,
and then
it's a huge
actually,
voting bloc, absolutely, and
and then
especially among young people.
Trump said, "I'll take those votes." He did. And
But
that was one
they
of
couldn't
the
see that happening.
reasons, you know.
It struck me as really strange because they couldn't see it happening right before their eyes. Like every time Trump spoke about Bitcoin, crypto, there was an enormous traction for him. And they didn't look at that and think, hey, why don't we get a piece of that action for ourselves? They didn't think that. And it didn't make the calculus like, what are we getting out of being antagonistic to this entire industry and 80 or 100 million holders? What are we getting out of that? Nothing.
Well, it disarms one of their weapons. They've got two major weapons. One is the banking, the targeted banking, and like debanking, let's say, and the other one is the media. Those are the two ones, the two big ones. Um,
Hmm.
so you know, if you've got a double-barreled shotgun and now you only got one barrel, it probably means a lot to them. I don't know. I mean, not,
Yeah,
I don't think. I mean, my view of Democratic Party is it's the way it was run was absolutely malicious. There was just a control grab, and um, yeah. I mean, if you think from that mindset, then absolutely it makes sense.
it does make
So,
sense. Yeah,
yeah.
I think they got very complacent and arrogant because ever since probably the George W. Bush years, the demographic swings in America in the political spectrum was pushing heavily in their favor, and
Mm.
I just think they took a lot of things for granted in that
Oh,
time, and they just
I
do
don't
whatever they
think
want.
it, I don't think it was complacency. I think it was ambition. I think that they got really ambitious after COVID. It's like, shit, we can do a lot of things. Look at these people. They just do everything, you know, like government started to get really huge control. And then they're like, you realize the amount of power that governments can leverage. And then they'd already proven in the state of California that they could have blanket control over a state no matter how badly it was governed. Look at San Francisco, right? So they were like, well, we can expand this technique to the whole US. Man, it's ambitious, right? You can get the whole country, and they've had control over California for so long, despite how badly you do. As long as you control the airwaves, um, yeah. So I think they just went for it. They were like, let's go for it. They were maybe working very hard and not complacent. They were just like, yeah, look at this. Look at the state of the world, the way no one really pushed back with COVID. So,
That's
yeah.
interesting. That's an interesting way of looking at it. Because when I say complacent, I meant with respect to accountability for their policies. Not
Oh,
that
I
they
see.
didn't have the ambition, but they just felt like we could do whatever we want. We don't really need to heed any kind of warning signals or feedback loop
Mm.
from the electorate. We could just do whatever we want, and so they became complacent in their dominance of
Yeah,
the
yeah,
electorate.
yeah. Well,
That's what I mean.
ambitious. I was saying like they
Yeah,
were really, really starting to think they were the people
yeah.
in charge. I think.
I think
So,
that's part of it as well, and it's just they've spiraled into, I mean, the absolute nonsense that was happening. It felt like when Elon Musk bought X, when Twitter at the time, I felt like the bubble had just been popped, and the pressure
oh,
was
right.
just, I felt like I have sympathies with the left side of politics, right? Um, but I felt it's suffocating on Twitter and social media. People were walking on eggshells, and my account numerous times was suppressed. For what reason? God knows why. And you just can't have a free and healthy society like that where there are words you can't say, there are positions you're not even allowed to doubt, let alone oppose. And it was like that. And they were quite proud of their ability to suppress any kind of dissenting voice, and the shame they used as a tactic, the dogpiling, the cancellations, these were not hallmarks of a free and open society. Um, and I found that absolutely suffocating. When Elon Musk took over Twitter, it was like that entire bubble was popped. And suddenly it was like we had a breath of fresh air. And look, I got to put my hand up. Like, there's a lot of things on the timeline now that are deeply objectionable, but I want to see them there. And, I also got to confess that I find quite a lot of it humorous as well. Like, it's not, I'm not going to advocate for its incorporation into policy, for example, but just some moron shit posting a racist meme or whatever. I don't want the guy cancelled or put in jail or to lose his job or anything like that. Like, there has to be space for the offensive, even at the risk of me being offended as well. I'm happy to see that there's more space for people to be offended and for the most obnoxious elements of society to also be able to express themselves. And I think through this whole experience, having experienced the censorship on my account, it's probably brought me much closer towards being a free speech absolutist. I'm not sure that I would say that entirely, but much, much closer than
Yeah.
I was. Absolutely. And I'm very happy with the movement away from that culture of censorship online. I think we've still got a long way to go. Like, YouTube is still very heavy-handed. Instagram is very heavy-handed. I'm not on Facebook at all, so I don't know what that's like, or LinkedIn. But YouTube is incredibly heavy-handed with its censorship. So we've got a
Yeah.
long way to go, but at least he's now, he's broken the ice. And I think we've started to see Mark Zuckerberg at least signal
Yeah.
that he wants to move in that direction, and he's starting to say, hey, it wasn't me. I was just sort of led astray by the culture of my organization that I founded.
Yeah, well, I think he has to, given who's in charge now, right?
Well, he's a shapeshifter, isn't he? I can't confidently say that he has any convictions about anything except for the perpetuation of his empire.
Yeah. I mean, I don't know actually. Like, having listened to Mark Andreessen, I think he says that he's one of the few people that what he says behind closed doors is what he says in public. So I don't know. Like, I do think that
Sorry, Mark says that that's how he speaks, or that Mark Zuckerberg says the same
Zuck's
thing?
Zuck's
Okay.
walks what he talks behind closed doors. He does that in public.
So
As
he believed all
does
that nonsense then before Elon Musk bought Twitter and Trump won the election. All that nonsense that he was pushing in his organization and the
Yeah,
censorship.
he
All
was
that,
he
he believed in it.
apparently he was gearing up to sort of unshackle or something, but um, you know, I think it's the long form podcasts that has been really shaping. I mean, I reckon it was X and Joe Rogan that won the election for Trump, because Trump got on Joe Rogan. People, because for a lot of the world, Trump is just a Nazi crazy person out for world domination.
Hmm.
Like, I didn't realize this because I live on Twitter, social media, and long form podcasts, and but like you talk to people. I talk to Canadians. I talk to new Kiwis. Um, the general average is Trump is a Nazi, control. He's going for control of the world, and he's a
Yeah, I do
warmonger.
find it odd when um, I don't really talk to too many people from from Australia anymore. But when I do, I am taken aback at how entrenched the mainstream corporate media view is in the general population. So when I dip back into the media from Australia, or when I speak to some friends, the points of views that they reflect back are exactly what you would take from MSNBC, CNN, that sort of thing.
Yeah,
It's I don't know if you'd call it indoctrination, but they're pretty much in lockstep there. And
yeah.
I
Well,
think,
it's called
yeah,
propaganda, right? We termed it a long time ago. It's all just propaganda now. Like, media's gone from, the fourth estate, which is a backbone of holding up a democracy, to actually propaganda. Um,
yeah. Do you think it's
uh,
easier to propagandize a smaller country than a large one?
No, I think the opposite. I think a small country is harder to propagandize because people talk to each other. Well, when it's local, but it's very easy to propagandize a another country where people aren't there, right? Like you could say, all Germans are evil, and all Japanese, or whatever, post World War II, and it's easy to dehumanize someone or another country or other people. But when it's hard to propagandize a small country about what's happening at home. Um,
Oh,
yeah.
that's an important distinction. I think you're right there. I hadn't thought about that. Um, yeah, to other an entire nation,
And
definitely.
the bigger the nation, the easier it is to propagandize because there's stuff happening in, you know, 49 other states or that you don't know about. And so like, there is that talk is maybe democracy doesn't work at a particular scale because you can't really, the propaganda just overwhelms you. You can't really get down to the bottom of what's happening on the other side of the country.
Yeah, I, I, I guess depends. It does depend on which powers you invest at different levels of government, right?
Yeah,
So I guess at the federal level it should be as little as possible. More at the state,
yeah,
most at the local municipality,
yep,
city,
exactly.
for example, because that's the order of impact and importance to you. You know,
And
it's like you're working.
it, the United
Go on.
States is a really strong case where, it was decentralized from design. The states had the power, and so it was a local environment that had self-determinism around their own policies and laws, and so I guess the last, I don't know how long, probably 50 years, the federal government's getting pulling more and more control into a centralized sort of control structure. So, but it's been able to resist quite well with the foundation of the country. So yeah,
So far.
so far, yeah,
Mm.
yeah,
But they've got a really strong history of almost like an antagonistic relationship between the federal and the states, right? Like the states are quite proud of retaining the rights that they have. Whereas I find, for example, in Australia, it's much more malleable. Like I remember when we introduced a consumption tax. What do we call it? It's a GST, right? Which is consumption tax. And there was hardly a fight. It was just more of a negotiation about how the revenue was going to be split between the states. But they were quite willing to do it once it had passed the legislation, right? Because it effectively it was the main issue at an election. Am I remembering correctly? I think that no, because John Howard was a bit of a sneaky politician. I think he said at the election he would never implement it, and then when he won, and he was still riding high in the polls, like a year into his term, he said, "I'm just going to go for it." I think that's what happened. But it was a long time ago. So my point was that I think in the states, uh, these states are much more sort of strident about what their rights are, and they even fight to take more rights. Whereas in Australia, I think it's been the other way around. And maybe it might have something to do with the nature of the size. Australia's not quite as big a country in terms of population, so it doesn't really matter too much. We're culturally much more similar to each other than, for example, Americans, right? Like you're telling me a Texan and a Californian are really from the same country? They're
yeah.
so different.
I mean, what the I think, well, Americans are very individualistic, and culturally they're very different as well. So I think that individualism really shows up between the state and the federal government. There's a strong drive to be quite distinct. Each state wants to be very distinct. Um,
They're
and
all
maybe,
just Americans to me.
I mean, I'm not American, so I don't know the deeper
No,
inner
and it would take
workings.
someone,
But
yeah,
but
it
the
would take
fact,
someone who's got an appreciation of their history and their culture to be able to explain it to us.
Right. Yeah. But it just seems like the way in which it works is that there's a massive distrust of government. And so at the state level, that probably they inherit that as well as a massive distrust of federal government. And it's kind of a nice setup, right? It's like you empower the people to overturn the government. That you vote with your guns if the vote with at the polls fail. Um,
It's really interesting. I'm not sure what the best way is because you have a look at you have a look at a country like Denmark and Sweden, whatever, and they are very collectivists compared to basically any state in the United States, and definitely as compared to the country as a whole, right? And yet they're happier, right? They don't quite have the poverty, or okay, they don't have the high level wealth, but
I mean,
overall
they're very wealthy per capita,
per capita, sure, yeah,
and they're very happy. But I mean,
but if
if
they
you
come
look,
in, nobody really falls, between the cracks.
yeah,
Whereas in America, that's quite common and becoming more so, right? So it's like I guess a nation's got to live true to its values in order to be content, right?
yeah. I mean, you can, broadly speaking, you just need to run the metric on corruption. And the corruption in these Scandinavian countries and Switzerland, all these people are wealthy and rich. There's a correlation between lack of corruption and wealth, and there's also unhappiness and community fabric. Um, and the thing is, you on one end of the spectrum you've got Scandinavia, and the other end you've got some of these countries like Congo and South Africa, where it's just rampant corruption. And then the United States is still pretty not corrupt, but still a lot of corruption, as we've seen with Doge pulling out. There's a lot of, so it really comes down to individuals in power that are being corrupt. And um, the US system is effectively a system in which it empowers the people to have weapons against corruption if it gets to that point.
Mm.
Whereas the Scandinavian countries don't have the corruption. The question is, if you did have the corruption, what do you do? Right. And Switzerland is interesting because it doesn't have the corruption, but it's also got in place the power of the individual to be in control. So
And
that's
they've got a
a
lot of guns in
they,
Switzerland.
they got a lot of guns, but there's direct democracy. They can
Yeah.
veto the government and back it up with their guns, but it hasn't turned bad. Whereas, so we can say this system works, but it hasn't been tested. We haven't had a leader come in to corrupt it.
Yeah, yeah. I just I wonder about that, like if I was in America, I'd want a gun, right? Like I'd be a gun owner if I was in America. In the UK, in Australia, absolutely not, right? And there are all sorts of reasons for that. Um, but I just wonder, like a lot of people say, is it the Second Amendment, which is the right to bear arms in case the first one doesn't work? I'm like, but what are you really going to do if the state turns violent against you with your gun, or 100,000 people with guns, compared to the United States military, or even the United States police force, which is militarized? What are you going to be able to do?
I think quite a lot. I would say quite a lot.
Yeah.
Yeah, I think so.
'Cause here's the thing, you've got your guns, right? But they're not gonna come after you with guns. And you might have your militia, 100,000 militia, but they're not gonna come at you with the guns and whatever that you have. Whatever positions that you have, they're just going to, just use their air force on you or their tanks or whatever. And what's a gun gonna do? If
Well,
they really wanna come at you, what resistance are you going to have?
I think like you think about the freedom of speech, right? It's the freedom of thinking independently, the freedom to speak those thoughts. But then there's the freedom to assemble, which is ability to expand your thinking and get buy-in from your community. And then you got the freedom to bear arms. And so say the country, we should probably talk about countries where there's been an uprising against the corrupt government and see where, the difference between guns or not. But I would say when you've got millions of people with guns that are resisting corruption, who might be in charge of the military, ultimately the military ain't gonna drop bomb, carpet bomb a city, or is the special forces going to take out surgically 150,000 people, you know? So, and would they even comply with those orders?
I think they
So, if,
would. How many people died in the American Civil War, right? Because what I'm saying is like it's not necessarily if something happened like that, it's not just going to be
it would
the
be civil
military
war. It'd be
versus the
civil war.
people.
It'd be
Yeah,
civil
yeah,
war.
Civil War.
And I've heard that said that if Trump was shot, that would be the fastest way to create a civil war. Um, that he was if he was killed.
Yeah.
But the US is. I was listening to an old TED talk where she was a advisor to the CIA, and they built a quantitative model on risks to civil war, and it needed certain key elements to be there. Um, Things like divide between races, divide between religions, wealth disparity, and certain things around the social fabric of the whole country. And named all these countries. And actually, and now she was an advisor, um, not in the CIA. The CIA can't run the stuff can't run it on their own people. But because she's an advisor outside of her consultant to the CIA, she ran the numbers on the US. And the US was also very close to civil war based on their prediction model. And
Wow.
so, yeah,
I'll
I
have to get
think.
her name from you later on because I want to look that up. That's fascinating.
Yeah, you probably just Google it or ask the AI. TED Talk, Civil War, CIA model. You'll
All
find it.
right, I'll look that up.
Yeah,
Hey, let's talk some Bitcoin because it's 85,000 as I look today. That means it's all over, isn't it?
it's going to zero, man.
It's gone to zero. I love, I absolutely love the antagonistic shit posters. Whenever Bitcoin dips 5% or 10%, it's over. And you're like, mate, it's 5x from the bottom. What are you talking about? Right? And they never miss an opportunity. And I think Jason from the All In is getting in on the act because he's realized it gets him a whole bunch of attention. So he's playing the Peter Schiff card.
Jason who?
Um,
Who is Jason?
Jason Calacanis,
Oh,
right?
Calicanis,
Uh,
right. Yeah,
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 yeah.
yeah.
It's like he's
Oh,
basically Silicon Valley's Peter Schiff now.
did he
And
sell his Bitcoin? I think he has a bit. Don't we have a
mate,
bit
he
of
never
Bitcoin?
had any. His wife bought the Bitcoin. He doesn't have any. So like he tries to ride high off that decision and say our Bitcoin, but mate, it's your wife's.
Is there a tax advantage over that or anything? I'm just thinking it's
I don't know. I don't know.
okay.
But
Because
yeah,
that
yeah.
crew, Chamath, um, Jason, I forget who others, maybe Sax, not sure. Um, but there's a bunch of them, and I think at one point they were sort of skiting they own 5% of the supply back in the 2011 period.
Chamath
Um,
owned a lot at one point.
yeah,
Very early on, he said he bought $1 million worth, and that was when Bitcoin was peanuts.
yeah.
So
No, I
I
think I
think he
see it
probably
in
did
the
own that
blockchain.
much.
I think I saw it on the blockchain at the bottom. At the bottom, there was a run up from just a few bucks all the way up to something like $1,200, right? And they would create this mess because there was so much that was soaked up at this one point. I think it was the Silicon Valley crews, more than their crew, but the whole lot
Yeah.
that just bought right there for a few bucks.
For some
And
reason, Chamath has been rebalancing out apparently ever since he bought that big batch, and it just doesn't make
well,
any
you
sense to
you
me.
do tend to diversify a bit, and yeah, it's just I think with different investors, different ideas. Um, what is it? You invested 4 years ago, you get 13% per year right now.
Something like that.
Yeah, so
Something like that. Yeah.
um,
I'm
and
not
remember, he's a
complaining.
venture capitalist. He likes to get the 1,000, 10,000x with all his new investments, and so um, the
Yeah.
average good venture capital firm would make around 20 to 25% annualized across the entire capital base. So Bitcoin now oscillates between the low, which is around 13% to 80%. And if you go back the last 2 years and look at the annualized rate of holding for 4 years, it's oscillated from 13% all the way to up 80%. And if you're venture capitalists, it's for 20, 25, sometimes 30%. Um,
Yeah.
so that's if you're looking at the raw numbers. Um, there are investments that can beat it, but it's very hard to, and the average person can't. Um,
I think if you can forgive anybody for just treating Bitcoin as a mere hedge, it's probably the Silicon Valley guys because the returns that you've just outlined that that they're chasing and are very realistic for them. It kind of makes sense for them because the other thing is they've got to be building things, right? That's their whole point. It's not just a financial exercise. Um, they need to be investing in things
yeah,
that
absolutely.
actually change the world. So
And we
people,
are too with Bitcoin. We're investing in the future and bring that to, and
sure,
because it needs to, as more people invest it, it becomes more real as a store of value asset. And they're investing in the infrastructure of the future too. So it's the same stuff. I would say Bitcoin is the first venture investment that retail could buy, and they front ran the institutions because they weren't allowed to buy it.
hmm. On a risk scale of 1 to 10, where do you think Bitcoin sits right now compared to its past?
It's too broad a question because I have to understand what you mean by risk. Are you talking about drawdown risk? Are you talking about
No,
counterparty?
no, no. It's something that
Uh,
will persist into the future.
will it be around in 10, 100, 1,000 years?
Let's
Um,
say 20, 30 years.
Okay, so that is the risk of failure. Okay,
Hmm.
and if Bitcoin is around in 100 years and it's worth $2 in 100 years, is that a risk? Do you see what I'm saying? Is it if
Yeah, but
it
it won't be. It won't be, I don't think.
Yeah, like so when we look at risks, I mean that's my day job is I have to look at not only returns but the risk is one risk is the trade or the investment goes badly, me make a loss. The other risks is does the whole thing fail? Do you lose it?
So
You
here's
lose
what
your
I meant,
investment.
right? So the mere existence of the protocol does not mean that it hasn't failed. Okay? Because if in 100 years it's $2, I think the protocol has failed its purpose. And its purpose is to be a sponge for global liquidity and excess, right? So the price should reflect that at some point in the future as well. If it's $2, then it's obviously failed to me, right? So just its mere existence that someone is running the software somewhere and there's two nodes connecting or speaking, like they've
Let's
got the,
say it's if
that doesn't mean
Bitcoin
that it's still
to maintain its current size of users,
trajectory. Yeah.
not trajectory, but maintains its, whatever, 10, 20,000 nodes, has 400,000 users or 500,000 users, and has the same market cap in 100 years. Has it failed?
stagnation is not the same as failure, but I would say it has failed
It failed
to
as an
take off.
investment for
I would
sure.
say,
Fear
yeah, it has
fear
failed
would
to
have
take off.
outperformed it.
Yeah, yeah.
Yeah.
I
So
think I think it has to be a sponge for liquidity and
yeah,
financial access, and
yeah.
if it doesn't do that, it's failed to the extent that it's supposed to do that. That's as a store of value. The means of exchange thing is another question, but I think there will be many alternatives
Okay. So the
to that.
question is, the on a scale of 1 to 10, what's the risk of it not winning store of value?
Yeah,
1
let's.
to 10.
I think you've narrowed that down nicely.
Okay. Like the risk. So 10 is it's absolutely going to fail. 0 is it's absolutely going to win. Um, I think it's, I think it's, it was a store of value. I mean, it's already winning. It could get completely rugged if we don't handle quantum. It could get rugged by AI. I don't think governments can stop it anymore. Well, it could get rugged by a mishap within the core devs, the core development. It could get rugged financially through market instruments. It could get rugged by a speculative attack. I'd give it a risk of zero risk to 10 on risk. I'd give it um, a risk score of 3, potentially 4, maybe 4, 3 or 4.
4. How far back in the past would you have given it an 8?
I never gave it an 8. I figured it had. I, I mean, when was 8? Okay, 8. A risk score of
At
8
some
would
at
have
some
been
point,
would have
it
been in the
gave you
first
10.
risk score of 8 would have been in the first 2 years. Absolutely in the first 2 years, maybe the first 3 years.
Wow,
Um,
okay.
yeah, I think people are way too sure about Bitcoin. I think that Michael Saylor is way too sure about it. I think most people are way too sure about it. You talk to any core dev, um, well, not any, but like they're always grappling with all the problems that they're dealing with in the technical underpinnings. Um, I mean, even right now, I think there's there's a real split in where to go with covenants and so forth, the best technology. It's and like if we implement this, then what are the implications? And then does it open up an attack vector into it? Remember the Bitcoin code base is not set. It's constantly being developed. I asked Adam Beck, are we going to get to code freeze on the base layer and everything gets up there so this doesn't get messed with? And he said, yeah, we're trying to get to that. But then you go like, you've got quantum coming in that is gonna be breaking it. And so, we thought that was another 20 years away or something like that. Now it turns out it might be 5 to 10 years away. And so there's a lot of risks in transitioning between where we are now the um, into the quantum resistant ledger, right? Everyone would need to send their coins to the new, if it's soft fork, to the new wallet that supports the quantum resistant ledger. And then suddenly the 3.7 million coins that can be grabbed because the private key is lost is now going to whoever gets access to that quantum computer. It's probably going to be a nation state or a very large corporate like Google. I don't think it's going to be an individual. And then if they control the coin, then what are the economic and social ramifications when we think, oh, let's say it's Google. Now Google owns 3.7 million Bitcoin. What are they going to do? Oh, there's one CEO. It's publicly traded. Imagine if it's a maybe it's China. What is China? Like, what are they like? Well, now is Bitcoin geographically neutral? China owns 3.7 million Bitcoins. There's all sorts of risks, right? Like, it's not zero for sure. And we've got all these things to get through, let alone a break in the code base right now. So people are way too sure about Bitcoin. Um, but then also, you know, you've got to compare that to what would you invest your money in with zero risk? Nothing has zero
Nothing,
risk.
yeah. Not
You
even
just
your
have
house,
to,
right? So it's like
yeah.
everything's got a risk to it, and it's like I
I mean,
didn't expect you to say 4.
well, we were talking about whether it wins, and what that means is in 100 years it wins, or 1,000 years it wins. If I make a bet on holding, you know, Tesla stock or Google stock or Apple stock, and will it win in 100 years? You just run the numbers. A tiny fraction of companies are around after 100 years. The 100-year company is a thing. Very few companies make it. Very few. This is a very hard test. Will this hedge fund survive for 100 years? Zero have survived, right? Because none of them are old yet, but very few
What's
things
the
survive
longest
100 years.
what's the longest running protocol?
English or something like that, a language. Maybe Sanskrit, I'd say. I mean,
Okay,
20,000 years?
I didn't expect you to go to languages as protocols, but they are protocols, aren't they? I was thinking more from a technical protocol. So
Yeah,
like, how long
yeah,
has the
like
internet one been around for? 40 years?
the internet, was it 60s, right? So
Oh, is it that long? Okay.
60s. Yeah. Yeah, what's
Telephone?
this? Telephone is, I mean, I think they've changed the protocol a few times, right?
Have they? I don't know.
But it would have to be a protocol is a messaging system. All right, that's it. A messaging system to transmit information. That would be Sanskrit. It's gone tens of thousands of years. Um, written text of some form is the oldest that we have on record, and that's pretty much for sure. This leads us on to is is Ethereum, you know, a protocol, and it's not. That
What it,
Ethereum's not a
okay. I don't
Ethereum's
even
not
know
a
what
Ethereum's
I
not a
don't even
protocol. Actually, Bitcoin is a protocol because all you're doing is messaging. You're sending coins across the ledger. Um, Ethereum is it's in computers. It's a language compute environment, you know, and so that's different. It's very complicated. It's you notice that we have an internet, TCP/IP. That's a protocol. One thing wins. Everyone conforms to that language to send ones and zeros to each other. When you have a compute environment and you need a computer language for that, you don't have one winner. You have, you know, and we have how many stacks do we have? And not in, you know, you've got JavaScript, you've got, you know, C, you've got Lisp, you've got, you know, Python, you've got blah 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 blah, and it goes for and you have layers and layers, right? So these hundreds, maybe thousands of these compute environments, and so Ethereum, Solana, blah blah blah. Only this cycle has the market started to cotton on through market dynamics that these things are not protocols, that the whole world's not going to jump on Ethereum or Solana. Like finally now Ethereum has had the share market cap with Solana as they're getting traction. And
that
then
was always
that's
going to happen, right? Because there's no moat. And whenever I spoke to anybody who was defending Ethereum, they'd say, yeah, but they've got all the devs and whatever. You go, yeah, but think about the people who spend their money to buy things that are on Ethereum. It's transactional, right? Ethereum doesn't have a moat around those customers. Those people are interested in the transaction and they can transact anywhere for the thing that they want. And it makes
yeah,
no difference what the underlying
it
protocol
wasn't
is.
it wasn't it wasn't clear actually. It wasn't clear because there was such a thing as network effects of DeFi applications where you could one DeFi application could talk to another DeFi application on the same platform. Um, and so it's like you're on the same network. And so I could, so you could, have your little MetaMask wallet, which is interacting with, one site, and then it would go to another site and interact. And it could, this site might show you all the investment um, returns you're getting across your entire wallet. This thing would then now, and then you can interact between different DeFi apps. And so there was something to be said. Would that be the reason for a lock-in? But now we're in the age of bridges and bridging across the networks, and that's very clear that, and people are building on across and moving to different particularly when Ethereum's gotten very congested. It's like and I can't build on this platform, I have to build on Solana because it's got the speed or the cheapness. um, and so yeah, and that's always going to happen, right, with these. Well, it's clear now that it was going to happen. Like, I think it's very clear it's happening, just like um, development environments outside of crypto just for computers. So
They will
anyway,
continue to cannibalize each other over the market share that is not Bitcoin.
yeah, I mean, the like, what should Bitcoin dominance be? Well, at a very, very basic world of only crypto, it should be 50%. But if Bitcoin becomes a dominant store of value across the entire world, um, it's going to be one half Bitcoin, and then on the other side, it's going to have to share it with real world assets like stocks and real estate and all that stuff. So Bitcoin dominance has got to be higher than 50%, and it could be 90 something, 95, 99%. I don't know. Um, Panning
Willie,
forward 100 years.
let's talk about market cycles, because I think the theory that's stood the test of time so far has been the liquidity cycle. I think that matches closest to it, and people seem to have abandoned the idea that halvings drive the cycles. Have you made a conclusion one way or the other?
Well, I said last time, 4 years ago, that that would be the last cycle. And then after that would be a random walk based on the adoption, and that there was two impacts. One was global liquidity, and the other one was a halvening, and they were superimposed. And the halving every 4 years, its impact. And so, given enough cycles, the halvening won't make an impact, and now it's just global liquidity. And so, um, the question is, like, what will that do to the price pattern of Bitcoin in the future? Will we get massive run-ups, and will we get massive pullbacks according to those 4 years? And I think it's pretty clear that the cycles are becoming less strong, and that's because of halvening. It's also because the Bitcoin's no longer small, and it's you don't get, with a big asset, you don't move as violently. So that's how I think about it. It's not, is it halvening, is it global liquidity, which is, I think it's two superimposed demand supply impulses, and one is weakening over time. And then that's where I came up with the idea that um, we'll eventually have a random walk, and it'll look a little bit more like equities, equity markets, you could say, where those things tend to, it's sort of like uh, you know, a beeline upwards, and then every so often you get a correction um, when the liquidity drops out, and then it comes back up again. So,
Well, we saw
uh,
that with a stock like Amazon, where the growth of its business, the adoption by consumers, everything like that led to pretty secular 10, 15-year run. I think I posted the chart and I said, if you're wondering what Bitcoin looks like post cycles, this is the Amazon share price over like 10, 15 years. And it's essentially, it looks like a straight line on a log, but there are also like some serious corrections along the way. It's just that they're not prolonged corrections like we've had in Bitcoin, where you could almost, well, not almost, we do call them cycles. They're just pronounced 4-year cycles, whereas they have a dip and it barely lasts 6 or 9 months, and it's away they go again, 20% compounded per year. And that was a phenomenal thing to watch, because the thing I remember all the way through that was the mainstream media narrative was constantly, but Amazon's not profitable. Amazon is not profitable, and they just kept repeating that for about 7 years until it became profitable, and then all the gains in Amazon were basically baked in until 2020, where the pandemic saw a huge boost in their business again. But I think the same thing could happen with Bitcoin, where corporate media narrative doesn't change all the way through this prolonged 5, 6, 7-year upswing in the price that gives that the cycles sort of fade into the background, and all the way through they're going to be talking about volatility because of a 20% dip here and there, maybe more. That won't last as long as the previous cycles that we've been conditioned to expect. And we already see, as soon as there's a little bit of blood on the floor, that the media kicks in with the narrative and people get scared to venture into Bitcoin. The price recovers, but the narrative does not shift. And it's almost like they're waiting for every dip, and they just take out the old articles, the old narratives, come back again. And we see the same trolls on Twitter pushing the same lines. So I think by the time that narrative changes, Bitcoin will be well and truly mature. It will be accepted, most of the gains baked in, and it could be well north of $1 million. Most nation states will have some allocation. Every corporate will have an allocation. It will be just something that you do, even if it's, a little bit of your liquid assets, just 1 or 2%. They will all say so.
Yeah, I mean, yeah, I agree. I think that the way it'll look is like, every so often buy the dip opportunities, and then it keeps running. I would also say most people have exposure without even knowing it, because they own the S&P 500, which includes Tesla, which owns Bitcoin, and more of that's going to happen. Like, they don't even know they're a citizen of country, and the country owns Bitcoin. That's just everywhere. Even if they haven't bought it themselves, it's there because it's a part of every portfolio that they have
You
without them
mentioned
knowing
Tesla,
it.
and something happened last night. Some guy was posting, when a significant company buys Bitcoin, then we'll know it's a serious asset. I'm like, why do people keep forgetting that Tesla and SpaceX have an allocation to Bitcoin? Tesla's a significant company, right? At one point, was it over $1 trillion market cap? There aren't many of those in the world. So
It's definitely one of the top. It's part of the Magnificent Seven, isn't it? So, yep.
yeah, I just wonder, is it because they're not constantly buying and hitting the headlines, or did the shine come off Elon Musk's sell down during the last bear market, and people who just want to forget about that?
Yeah, I think whoever posted that forgot or didn't know.
It seems to be quite a common thing that people forget that. The other thing I wanted to ask you is, like, since we hit the bottom of the bear market in 2022, was it November 2022? And yeah, it was like 15 and a half. We saw a bounce and a bit of a consolidation period of about 8, 9 months. And then in the anticipation of ETF approvals, we saw quite a strong run up. And then essentially 2 more legs after that, driven, I don't know, if I was to speculate, primarily by inflows into ETFs, which were really strong, and also MicroStrategy as well, not insignificant. But how do you read that journey from the bottom, and where do you think we are right now?
Well, I mean, it's really interesting and good to see the spot ETF come in and companies like MicroStrategy come in and buy it spot, right? They're buying spot, the underlying asset, instead of buying exposure to the futures market. And so we have had a spot-driven bull market, um, and that's usually a pretty safe place to be. Um, and I mean, I think people, I mean, my friend Samson Mao is always talking about the God candle, and of course, he's always talking about nation states. He's talking to nation states, so he's super bullish. And maybe he's right. I would just say, because I'm more of the quant guy, you just have to work out how much capital needs to be put into the network to push it up. Okay. And so, was it is it 1.6 trillion today?
About it's a
It's
ballpark.
getting on a multi-trillion dollar asset. It trades like macro. Um, if you if we want to um, push up we want to double if we want to go say 1.5 trillion to $3 trillion, so doubling the price. Um, That's a significant amount of capital that needs to go into the network. And so, um, yeah, like it's not like Chamath and his buddies buy Bitcoin at $3 and it goes wee all the way up to $1,200 anymore. It's got to soak up decent nation state money, and you might get a doubling or a tripling or and so forth. It's going to take time. So I'm with you on that sort of steady, like the picture you painted with Amazon stock with dip opportunities. It's going to be like that. It's not going to be this reflexive boom up like this exponential curve that you saw in 2017. Um, yeah, it's different nowadays. So yeah, I mean, that's how I see it. How underlying structure wise, that's how I see it. And also we're very highly correlated to macro. We're just another macro asset. Bitcoin is just another macro asset these days.
Well, that's
Um,
where we
s-
want it to be, right? That's what we've been saying for many years, right?
yep, yep, and it is now. And so on my Bitcoin charts, like when I have my trading view up, I have, all the signals I use, and on the right hand pane is the other Bitcoin chart, which is the S&P 500, and I'm looking at where that's sitting and whether it's overpriced, underpriced, whether there's divergences in the price and it has to correct and it's oversold or overbought, and then let that inform Bitcoin. And so like Bitcoin's pulled back, and they're like, why the hell is it pulled back when Trump's announcing strategic reserves, repealing SARB? There's all these things that are like super bullish, and it's pulling back, and it's because the S&P's diving in price, and it's highly correlated. And we didn't pull back as hard as the S&P because that pulled back to like June last year or some price, June. May or June last year, that price levels, and we haven't pulled back that far in Bitcoin. So there's underlying strength in it, and we have to see where we go because we're not an independent market right now. And is the S&P climbing right now just because a technical divergence it was oversold, and is it going to come back up and then it's a dead cat and it's coming back down into a recession? If that's the case, then Bitcoin's gonna go down. Never mind that everyone's the nation states are planning to buy it or stacking it, the price is going to be traded down.
When you mentioned about the flow of funds and what Bitcoin will need to reach, to add trillions and trillions in market cap, I find that people mention the flow of funds required to take Bitcoin to say 10 trillion, almost as though it's some kind of insurmountable barrier for it to do so. But then you have a look at what happened to gold in the last 12, 18 months, and it's added something like 5, 6, 7 trillion in market cap, which is like 4x Bitcoins, right? So the money is out there for
Well,
people to buy. It's a question of, is the allocation going to come?
it made a 50% gain over how many years when you say that $5 trillion, and
But over a short time, relatively short period.
when it broke 2000 to get to 2500, because it was
I'm
2000
trying to
at the
remember.
top of the last cycle. 4 years ago it was 2000. Now it's what is it now today? 2000.
What, gold?
Yeah,
Gold is
what's gold?
3,000.
It's 3000. We made
Yeah.
50% gain in four years. Good on you. Well, I mean, actually, it beat Bitcoin because Bitcoin was $60,000 or 70,000, and now we're back at 80.
I'm just trying to
um,
look up what the gold, that post that I made, um, if I can even remember what it was. No, I can't. Oh, here we go. Gold. Are you joining? Okay. Nah, can't find it. Here we go. Here you go. What happened when global adoption hits Bitcoin? Gold's market cap has surged 4.9 trillion. I posted this in November of 2024, right? Gold's market cap surged 4.9 trillion this year. So in 2024, it added 5 trillion in market cap, which at the time was 3 times Bitcoin's market cap. And slightly more than that now, right? So what I'm saying is like this
no, it
cap.
was 10 times more than Bitcoin's market cap.
No. So the difference that it added.
Oh,
So
okay.
I'm saying it added 4.9 trillion, right? That increase in gold's market cap
Yeah,
alone, just the
yeah,
increase.
but you have to do percentage gains, right? You don't you
He
don't
says you have to do
you
percentage.
you can't just pull. You can't just say like, my buddy's startup, um, the latest round of valuation, he's only added, $5 million to his market cap when yesterday Apple went up by 5 billion. It's like, because remember, gold is the largest asset on the planet. There's not an asset that's larger than gold on the planet.
So it's
Um,
10x Bitcoin, more or less.
yeah,
It's a little bit more
yeah.
than 10x, right? It's about
Yeah,
12,
so
13.
it'll take time. It'll just take time. Um,
But
you
here's
know,
here's the thing that I would say to that, right? I think the assumption was always that the adoption would go on an increasing scale, right? First, it was, the ideological people, technically interested people, and then it was kind of like Silk Road ushered in a bunch of misfits and people experimenting with all sorts of things, right? It brought a lot of people in, and then it kind of went along from the outsiders of society, people who are just thinking differently, individualistic, to becoming more and more mainstream, right? That's on the retail side. But then when we have a look at the institutional, corporate, government side, we always thought it would probably follow a similar path. But what we've seen in the last 4 months is a leapfrog to the final boss, which is the United States government saying, we're giving the green light to this, we're going to buy it. And I'm hypothesizing that perhaps that accelerates everything. That suddenly you have the sovereign wealth fund of Saudi Arabia looking to buy. Michael Saylor said he presented to an investment forum that had over 150 billionaires, sovereign wealth fund managers, all about Bitcoin, right? I'm thinking that we've leapfrogged that adoption scale, right? That spectrum that we thought would be on a sliding, increasing scale over time. I think what's happened with the Political Action Committee in the States from the crypto industry to push or pull Trump over the line has accelerated everything by probably 4, 5, maybe even 10 years. and that suddenly every company in America is allowed to own Bitcoin now. Whereas, on a different timeline, had Trump lost, it was going to be the opposite of that. We were looking at a stranglehold by the Democratic Party on the industry, and now it's just gone completely the opposite direction. And I guess I'm wondering whether or not we've just leapfrogged 10 years and it hasn't hit the price yet because the allocations haven't come, but the groundwork is being done. Whereas before, 4 months ago, before Trump won, no one even thought that was possible. And now everyone is looking at it like, this is inevitable. We need to move and make our plans for it. And the allocation might come at the end of this year, because some of these organizations, they move slowly. So 12 months would be quite quick, right?
Yeah, so
What do you
I
think
mean,
of that
I don't
hypothesis? Yeah.
disagree. I don't disagree that the floodgates are opening, but it's not a floodgate of fast-moving dam water, right? It's floodgates of a slow-moving glacier, right? It's like it takes time, right? Do you know it's taken 4 years for MicroStrategy to actually gear up and really buy Bitcoin? 4 years,
What do
right?
you mean by that?
It's
What do
like
you mean
you,
by that?
you look at their balance sheet, how much Bitcoin did they really stack? It's all been the last year. The
Oh, I see.
the
Yeah.
the right first thing he's got to do is like he's got to convince the board. That was before they even bought their first Bitcoin, right? And then they needed to inform their shareholders and provide a way in which the shareholders that were against it that they can sell their shares. By the way, this is because Michael Saylor owns by far the vast majority of MicroStrategy's stock. It's a little bit like Musk, where he controls so much of the company, what he says he can leverage. Even that took 4 years for them to really gear up and buy Bitcoin. If you look at the US government's strategic reserve, probably take 18 months. 6 months if miracles happen. Like it take 18 months. And you look at a publicly traded company that is not like Elon Musk or Michael Saylor, where there's a founder with massive control. The board can't buy. They can buy a little bit, like a little test, fraction of a percentage point, where it won't change the day-to-day operations of the company. Um, do a bit of this. Eventually, they have to take it to a full vote of all shareholders, and even then, there's this massive stuff you have to do to get the company in line where they can start to bring it on board. That it takes years, as MicroStrategy has shown you. So when you think about a nation state adopting it, it's going to take time, right? Like we talked about institutions, the company, the spot ETFs come in and they thought they were going to pile in. No, that like it'll take 6 months to years before the operational due diligence of these very large institutions, mutual funds, have completed the full due diligence of all the underlying custody and how the ETF works and so forth. It takes time before, and so it was when was the ETF? It's what a what when did it launch? How many months into it are we? 18
No, it was
months or
January last year. It was January last year. Yeah.
yeah,
January
it's like
11th
not
or
even
12th.
18 months into it, right? And this
Mhm.
is around the time where some of the institutions can come in, right? And so
Yeah.
it's just all these taps turning on, but it's going to take a while for it to get the flow up. Like I'm going to ask you today, how much do you think is being put into the Bitcoin network?
I don't know. I haven't looked at it.
$482 billion in the last 16 years, right? And how much has MicroStrategy put in the ETFs? Big chunk of that.
35. Yeah. No, 35. Oh, the ETFs as well. Yeah. So the only thing I would say is MicroStrategy, since they started buying, have consistently bought. But what's happened is that the market um, has embraced them and shown an appetite, an increased appetite for their willingness to borrow, with various securities. So I don't think it was 4 years of MicroStrategy preparing to buy more and accelerate that. I think it was just the market took 4 years to facilitate their purchases. And I think Michael Saylor said something like, we sort of stumbled into this opportunity. So it was like, it wasn't their lack of preparedness to buy more. It was the market was not prepared It took 4 years before these opportunities would arise
Yeah,
for them.
it took for the next bull market such that there was a
Yeah.
MNAV that was
And
above.
so when they announced their $42 billion plan for the next 3 years, 21 million of debt, 21 million of equity, everyone thought that was ridiculous, right? And within 3 months, they'd bought something like $20 billion worth of Bitcoin. It was just crazy. And that was only in, I think, October they announced that, October, November. And then suddenly there was just a massive appetite for the securities they were offering. And they've reissued a new plan now.
But I
And
would
I
say
think
that's
they'll
no
outperform
different
that.
from any
Sorry, go on.
entity. I would say that's no different. Like if you have a nation state buying it and you enter a bear market, mm, the politicians that instigate it ain't going to be too popular until the next bull market. There are like a lot of and if the nation state, there's political dynamics that are happening, and there's bull market cycles happening there too. Um, and I think it was UAE was thinking of adding a sovereign wealth fund back in 2019. That was definitely the case, and they already said I was going to take a year of figuring out how to do it. Um, and yeah, like this takes time, and then when they turn it on, they test it with little trickles, and then
Yeah.
and so $842 billion, people. That's how much been put into the network. Even though the market cap's doubled that, so we've got a two to one ratio. So if we want another trillion growth to two and a half, um, billion dollars, trillion dollars, we got to find another 500 billion. There's 842 billion that's been put in. These are the numbers, okay? These are
Yeah, it's not
the
hard. What I'm
ballpark
saying,
numbers.
that's pretty easy when you consider that MicroStrategy alone has got like 35 billion. Their cost basis is, I think,
5
35
billion.
billion for what
Yeah,
they.
so cool. We just need another, I don't know, 13, 14 more MicroStrategies, and whoop, we're going to get our $1 trillion, which is going to push price up 66%. These are the
So
numbers, right? We're not going to
yeah.
get 10x in the next 3 months, right? We're not going to get $150 to $20,000 in 1 year. It's a big moving ship, and people don't grapple. That's the type of capital. We're talking large trillion-dollar assets.
Jay
Um,
Powell is going to come to the party and prove you wrong, mate. Don't worry about that. Hey,
and then
let me ask
yeah,
you.
yeah.
Let me ask you about. So you said we need, another 10 or 12 micro strategies. Well, we've got one new micro strategy, and that's GameStop. They've got 4.6 billion in cash, right? They've already issued 1.3 billion after announcing that they're adding Bitcoin as a treasury reserve asset. They've issued 1.3 billion in convertible notes. They are 10 times the size of MicroStrategy when they started buying Bitcoin and have 10 times the cash. So I wonder if their strategy is to hold on to their cash and use that as a means of servicing any debt that they might have and then borrow as much as they can. So their 1.3 billion, I think, is a zero coupon, but
Yeah.
so
It's pretty
uh,
interesting what public companies can do, huh?
So yeah, and they've been publicly listed and audited for how
Yeah,
long, right? More than a decade.
right. Yeah.
So they've got a lot of transparency there to inspire some level of confidence for lenders, such that they can borrow 1.3 billion in 2 days after announcing a new investment strat or investment policy. So how do you think? Do you think they will use their cash to just buy Bitcoin, or do you think they'll continue to issue convertible notes? What would you do in that instance? Would you just hold on to the cash as much as possible and borrow to give confidence that you could service the debt if you had to?
Oh, I mean, look, I'm not, I haven't been following it too closely, but um, I think the dynamics is that when you have a kind of a MNAV that's close to the one, you use convertible notes to get the leverage up so the MNAV drops, and then you like you do the ATMs on the other side, and so there's a kind of like a straddle play. Like at one end you do convertible notes, then you do ATMs, and it just keeps the yield machine going. I mean, I have to look into that a bit deeper, but like I think that's a general dynamic. So there is a method around how you do it and what timing, and based on your market cap and how much Bitcoin you have in your treasury. And MicroStrategy is playing that game as well. So it's not one or the other, but both at the right time. Um,
What?
and yeah.
How much do you think they're capable of borrowing? Because I made a post in jest, right? I said with 4.6 million cash, they could they could finance 100 billion at 1% for like almost 5 years, right? Um, it's it's half joking, but it's half sort of like, well, the possibilities are quite large.
Yeah, but that's tapping into the same capital base as MicroStrategy. And so, like
Same
now
influence.
you've got two on
Same,
ramps, the same on ramps, same
yeah.
capital coming in. Now you've got two to choose from,
So
right?
can we
So
see? Is there anything stopping them from raising 20, 30 billion in the next 6 months?
depends on the appetite on what's sitting on the other side of the on ramp. But that the appetite, if that's not being serviced by MicroStrategy and they want more, then sure, that's going to help. But if MicroStrategy is actually capable of delivering the total on ramps, then, but I don't know what that answer is. Have anyone researched like what is the appetite that is out there? Is Michael Saylor probably the one that knows, and maybe he is issuing just that the appetite is right now. Apart from the one in Japan, what's the name of it?
It's a meta planet.
Metaplanet
Meta
has a different
planet.
market. It's the Japanese, it's the yen, and so that's a different, there's a different appetite there in that country. But if we're talking about the US stock market and US equities and the bond markets there, like I think it's a good question, right? If the appetite is not being serviced by just MicroStrategy, then it could be significant. Um, Otherwise, maybe not.
Well,
That's the
we're
question.
starting from the charts. We can see there's an uptick in the liquidity cycle, right? So that money's got to go somewhere. I mean, if there's an excess, it's got to go somewhere, right? So who's to say that this is not just the beginning, right, of more micro strategies in GameStops, right? Or even if it's just those two just doing it at a larger scale, if that's even hard to imagine. I know, given what MicroStrategy did in the last 4 months, but that scale of that game plan, it could double and triple, right? It could double and triple because
Well, we're
that
still we're
demand
we're
came
still
out of nowhere.
talking we're still talking tens maximum in the tens of billions, and
Yeah,
a 10 billion is equal to 1% of a trillion, and we need a trillion to get of influxes to get us a third of the way to gold or something. So
yeah.
you put it in perspective is if we want to get to exceeding gold's market cap, we need roughly 10% of world equity valuation going into Bitcoin, or we need 1/10 of world GDP going into Bitcoin. Do you think that's going to happen? So that's so where are we? That's kind of to get the next 10 to 20x, we need 10% of world GDP to go into Bitcoin.
Hmm.
And do you think that's going to happen this year? No. How many? It might happen in the next 5, 10, 15 years, but that's a time horizon. So that's, do we get a God candle to $1 million? Uh, you can have that in markets because there's imbalances, like how GameStop just ran all the shorts. That's how you get to it, but it's not. Well, when I'm talking these numbers, I'm talking about sustained, rational, not rational valuation, but fair value based on the actual capital in the network. Sure, it can go way up and squeeze everyone out, but it'll come back. It'll come back down.
Yeah, I mean, even if we got another parabolic run, let's just say that this year ended up with a parabolic run, right? the expectation is that it would still come back down to, I guess under 150,000, right? At least under,
It'll
or
always come back to the realized cap, the amount of money that's stored in Bitcoin. It always comes back at parity or below, because it once it gets under that, then it's absolutely undervalued. But it's always trading at a premium above. Mainly, it's let's say for 3.5 to 3.75 years out of the 4 of the cycle, it's trading above that, how much is stored in the network. And it can run really high. It can go 5 times higher than what's stored in the network at the peaks. And that's when you get the exponential run. I would also say the last cycle was not an exponential run, it was like a linear run, and then it rolled
cat
over.
felt it. Yeah, it just
Rolled
stopped.
over.
Just died on
And,
its ass. I
and
wasn't expecting
you know
that.
why? Because that cycle is the first cycle that some dude can sell Bitcoin without owning it. In
Oh,
2017,
the
the only
derivatives.
yeah,
Yeah.
the only person that could sell Bitcoin to the frothy masses were people that, the few people that owned it, and they need to be coaxed to sell it at $20,000 when the prior week it was 10. And it's like, okay, I'll sell it, but that's when it topped. So that's when you see it exponential, and you saw it in all these crypto markets when there were no derivatives. And so I don't think we're going to get those exponential runs anymore, because the market will naturally correct, because Wall Street people have lots of models that says this is overheated. We can sell a derivative into this market.
So, Will, I guess the two questions that people are always asking you and thinking about when it comes to Bitcoin is, where are we in the cycle? Do you see any sort of
Didn't we just
over
negate the
exuberance?
cycle?
No, no, no. I don't mean cycle, but do you see any over exuberance? Is there froth in the market? What's the situation with leverage, um, and also like looking out for the rest of the year? Do you think that no longer matters? Like, because a lot of people are saying, yeah, yeah, by the end of the year, that'll still be a cycle. I am leaning probably 60-40 that there aren't any more cycles and it'll just be what we discussed a moment ago. Um, but do you think that plays out?
Yeah, I think that I'm waiting for a correction. Maybe we've started. Um, I think because of what macro's doing. Remember, like we had COVID, and it was whipping along around 10,000 up and down. I went to 14, it came back down to 6, it was coming up to 10, and then COVID happened, and went down to 4 or
Three and
something,
a half. Yeah, I think it was
three
three
and
and
a
a half. Yeah,
half, a
yeah.
V-shaped recovery, 10, and then it went up. It's very choppy sort of reaccumulation phase before the real bull market happens. Well, technically, we're in that timing signature, right? Where it's normally like the 2017 version, 2016 was the version of that where it was just gradually choppy but upwards, and then it goes off on the bull run. We're in that, so um, I I'm still waiting for that correction, and I'm thinking of that around macro. I think the S&P's maybe dead catting. It might recover from its overselling. Maybe it hits 6,000 or not, but I think it will keel over again, because I don't not seeing enough strength in it. I'm not seeing much strength in Bitcoin either. Um, and so whether or not, if that happens, then I think it's going to creep down lower. Might revisit the 70s, and then we enter the summer months. Remember, summer months is go away in May, come back in the summer, come back in spring.
I
So
looked into that. I looked into that. It's kind of like 3 and 4 years. It's kind of like that, but there's always that 1 year that's an exception.
yeah, did you looking into for the S&P 500?
No,
Like
no, just in Bitcoin.
You
just on
can't
Bitcoin.
you can't count the years where Bitcoin was like a tiny startup where like a few guys could push the price up infinitely. Now remember we're highly correlated to the S&P with it's a multi-trillion-dollar asset class, so um, that has a lot more sway now. Certainly the summer months last year were terrible. In
And the year before.
amongst the buying of the spot and of MicroStrategy and all this. So yeah,
Yeah.
so we're gonna come like we've got April and then we've got May, right? And I'm not seeing much strength in March. And when I say strength, I don't just mean price. I mean the capital flows are being out of the network. That's all measured on chain with that includes the spot ETF, MicroStrategy, and all the stuff. So the way I'm measuring it, it's out. The sort of the shorter term speculative money is moving out, and so I want to see that climb. And if you know it's climbing right now, the last half week to a week. But if that goes exponentially higher, then sure, maybe we're getting seeing some strength. But I'm just cautious. We're in that. Remember COVID, right? Remember the last pre-accumulation. It's like going all over the place, and then it
Mm.
really comes down harder, lower than anyone thinks, and then it's off. And we're in trade wars and tariffs, and a lot of confidence being knocked out of the market. And then you're also seeing signs of liquidity injection. But liquidity injection, if you look at it, they inject also when there's going to be hard times coming ahead, trying to soften it. And we've got tariffs and a whole lot of investors getting pretty skittish and uncertain about the impacts. And at the same time, they're injecting liquidity, which is hopefully going to soften that blow. Doesn't mean that we won't get like a COVID thing as they're injecting liquidity. And so I think the whole crypto world right now is on hopium, well, too bullish. I think that like until the whole market turns really bearish, I think right now, given how price is behaving to the fundamentals of what's happening, I think everyone's too bullish. I think that we're going to correct. We have been correcting. We might be dead catting, but maybe we get some cheap Bitcoin, which would be good for the true maxis that want to stack some cheap coins. Because I was really pissed off when it ran to 100 because I felt like I wanted more time to buy at 60 or 50. Um, and so, yeah, there you have it. That's me. I'm like cautious. Anything can happen, but right now I'm not seeing signs to be elated. I'm not seeing God candles, and um, yeah.
Yeah, I mean, we're far from euphoria at 85,000, which I find incredible. Um, Very encouraging actually, because it does give us more time to stack at levels that we've become accustomed to now. So, 85,000 when we were 2 years ago in the bear market was a bit of a dream, right? We thought it would take quite some time to recover from what was a catastrophic industry meltdown. And so here we are sitting at 85, down from 100. Was it 109 or 107? I just think it's fantastic. Like bearish at 85, fantastic. I see the timeline from an engagement point of view is really quite dead. I don't see any exuberance whatsoever. Putting aside the few, bull posters who are bulltards like me, um, given, but like, like it's not serious analysis, for example, and I don't think it's reflective of the general mood on the timeline either. I think people are quite circumspect at the moment. Um, and I wonder if we're just going to repeat what happened last year, where we're just chopping for 9 months before we gradually inch up and break out again for another sort of step. Which would be amazing. Wouldn't that be amazing? Like, we just get a 30 or 40% run up, and then we just chill out for about 6 or 8 months rather than having the deep 30, 40% correction. I think that shows signs of maturity as a market and asset class, even though opportunistically it's not quite the same.
I actually think that's exactly what happens is that we'll chop around, maybe we'll get a little bit more pain than last year, and then we come back up again, right? And maybe we get our full bore sort of bullish phase. It'll be and I think it's going to screw with the timing, like because we're thinking these cycles aren't really going to be so exact anymore. I think, I think of it as last cycle. It's just random walks of like your Amazon case. So everyone's thinking, oh, it's tail end of this year. We're just going exponential because every December, every fourth year, every fourth December, you know?
One last thing. I mean, I really appreciate your time. I can't believe how long we've been talking for, actually.
Yeah, we need to cut
um,
this down. We need to how long does this
no, no,
podcast
no.
last for?
I mean, it's almost 3 hours that we've just had a chat for, right?
Yeah,
And
but you
so,
booked it for three. I thought you were just kidding.
yeah, but I didn't. I booked for 3, thinking we'll talk for 2, and plus minus whatever, right? Because to demand more than 3 hours of someone's time is a bit, it's a bit obnoxious, right? It's like come in for 4 hours. No, no one's going to do that, right? Um, last cycle, um, as well as being a huge commercial success, I thought it was incredible service to the community as well. I want to talk about your newsletter and on chain, right? And your decision to stop that, because at the time I just thought it was incredibly classy thing to do at the time, because not many people would have done what you did. And so the reasoning behind that and how you continue to use on chain, if you do, in your decision making process.
Yeah, well, it's ultimately the method I use is on chain, obviously. I measured demand and supply on chain. That I was measuring, it was 83% predictive at the start of it, and then near the end of it, it was 50-50. So it was no edge at all. And I was thinking, sure, it's also an arms race, right? So you think about being on Wall Street and being right 83% of the time. Like if you're a good trader, if you're 51% of the time and you got good risk management, you'll make money. Even 49% of the time, if you've got good risk management, you'll make money because your wins will beat the losses. So the writing was always going to be on the wall, and I felt like while Bitcoin was early, I wanted to write a letter for retail to have, and then as the accuracy started dropping, and also bear in mind the subscriber base is retail, they weren't very sophisticated managing risk. Um, it, I didn't think it was gonna. I thought it was gonna be damaging than helping. Whereas originally, I think it was helping because of the accuracy, so you couldn't go that far wrong. And also, it was encouraging people to trade, and I just didn't think that people were saying, "But I get this letter, I could trade," and the trade is it takes a long time to understand risk and mitigate it, and so I felt like near the end of it wasn't adding value, so I quit it. I shut it down, and I still do my thing, and my models are way different now. They're much more. The, Part of the problem of the accuracy was because the on-chain does not account for the whole market. Um, as derivatives came very, very dominant near the top of last cycle, this became less accurate because a lot of activity was happening with derivatives. There was a lot of shorts that came in. I was really out of bounds near the end, and I wasn't picking up on the derivatives data. And so these days, I'm like, it's a combo of a lot of different impacts, and the models are completely different, and they're working quite well. But I don't want to do a big letter again, and so that's why I just opened up a subscriber button on my Twitter, and it's just like a hobby. It's not big, and but it keeps me on the tools, and I enjoy that. And also, I've also stopped posting on Twitter about markets as well, because when you've got was it 1.1 million followers, it's just not fun to post things on the market because you're going to get trolls, you're going to get like a bunch of stuff thrown at you, and then you're going to get press articles written about Willy Woo predicts this or that, and half the articles mistranslate what you said. Other people then pick up on that, and the next thing you know, there's this. It's just all manner of crap, right? So um, I don't even post about markets on on my Twitter anymore. Seldom do I do it anyway, and so I use the sort of small subscriber bases where I think markets are going. And I've changed my lingo as well. I was like, I always say probabilistically it'll do this. And so I'm much more careful about it. And yeah, so but that was I think it was a pretty easy decision to shut down the letter. I think a lot of
Oh,
people,
no, 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 no. I'm 100% sure most people, given the success of that newsletter, would have milked that,
I think
continued to
a
milk
lot of
that.
people would have milked it.
Yeah.
Just not me. Just
No, easy. That's why I
it's
said it was a classy thing to do because, yeah, it's based on principle, not commercials, right? A lot of
yeah,
people would have said, "Hey, I'm still making money. I'll just pivot my message." And I saw many people, large accounts do that. So, yeah.
yeah.
Mm.
I think it was definitely the right decision to make for me and my happiness. And obviously, I mean, like you take a long time horizon. That's what we should be doing as Bitcoiners. And I think everything's about compounding, and compounding is just not money. It's also your time and your reputation, and ultimately, it's happiness. And so, um, yeah, it's it's crazy for me to see Donald Trump launch a meme coin, because I thought, gee, that's the worst you could do if you're trying to compound your credibility, your reputation. You're saying to the world, "I'm a grifter," and because yeah. So it just seemed, and also given his mature, his age. Um,
I don't think it was him doing that. It's well and truly his sons. I think it's Eric and Baron driving that because the youngest one is like 8 foot tall, and I
yeah,
think
true.
Eric is pretty strong into all the shitcoinery stuff.
Then, well, he would have still needed his dad's approval, I would have said. It's a family name. It's a family
Yeah,
office, actually. It's a family office.
yeah, but
It's not
I
in the.
think the older boys are well and truly into sort of they're sitting on the driver's seat, and dad pretty much says yes or no to things, and it's not the sort of thing that I would imagine Trump would have said no to. You do you think it was out of character for him to do? Like I would have thought, I would have predicted that.
I don't think he's very well educated on exactly how all these markets work. And so, I think he's much better on negotiations and even geopolitics, strategic, that sort of stuff. I think this sort of newfangled crypto thing, go for it. You guys, you see him in the speeches, you guys do this innovation. He's always sort of not exact about what you can say. He's like, you guys are having fun, you're doing good stuff, I'm sure. And but he's not into it. And so you're probably right. He probably says, sure, kids, go for it.
They sold $500 million worth of tokens. So they launched a coin, it went to billions, and they sold out $500 million worth. Right, so that's 500 million in cash into the Trump family's pocket. That's more money than they would have made on God knows how many ventures over a decade, right? Yeah, yeah. So like up until The Apprentice, I think The Apprentice really catapulted the family fortune and brand. I mean, he was obviously very well known before, but in terms of the size of the fortune and the opportunities that they had to leverage the brand, I think that just took
Well,
him to another level.
that's
Mm.
because those other things they did was actually building something. This thing
Mm.
is just stealing money off other people because it's a financial fraud. They just haven't figured that out yet. The regulators are all of, yeah, it's a pump and dump. Come on.
And it's yeah, and here's the thing, right? If you know it and you're gambling on the rise and hoping to get out beforehand, good luck to you. It's just like I look at meme coins like gambling in a casino or the horse races and whatever.
Yeah,
Just don't count it as an investment proposition, for love
exactly.
of God, because it's just not. And if you're gonna, if you want to gamble, you do it right. Like you don't go tell your friends and try to encourage them to put, hey man, send your
Yeah,
kids to
yeah,
college,
true,
let's bet on
true.
the horse. No one says that, right? But if you're doing that, you're a bit of a scumbag, right?
Yeah, most people don't realize that. They don't know what they're doing, actually.
No, no, it's out of desperation that, and that's the thing that I find like it's sad to see it, and on the timeline you do see it. There's so much desperation, and people look at it as I could put 50 quid on a meme coin, and I can get 10 grand out, and you're like, mate, you need to put 50 quid on 100 meme coins, and maybe one of them will pay you back. Like it's just the odds are so against you, and there's so many people out there desperately thinking that it's going to save them or make their year or whatever it is, and that saddens me. But if you've got a bit of money and you're like, "Hey, I want to take a punt," I couldn't give a shit. Like, I have no moral, ethical objection to that. It's the other things
There's
that surround it.
there's very few Bitcoiners or any accounts on Twitter, that is, or X, telling people how the whole meme coin or altcoin gets brought into existence.
Oh
And
yeah.
like who's telling that story? They're just saying they're shit coins. Like,
Oh, you mean like summarily dismissing everything, but not telling people, not explaining to people
well,
fundamentally why.
which accounts are telling you? Sorry, this is going on a bit. Like we're most getting into the third, fourth hour.
We're
Um,
cool if you're cool, mate. So
okay, so
I'm conscious of your time.
okay, I'll end in after this. Who is saying that this is how you create a coin, right? You get a team together, you create with a story, a technology, a meme, or whatever. You go to your seed level investors. You're going to need the seed level investors. If it's an altcoin, you want to get a big name VC in because it's going to really get the confidence game up, right? But you need the capital. Why do you need the capital? Because you're going to list on an exchange. Binance ain't doing it for free, so you're going to pay them. Maybe it's $2 million. You take that from your seed capital. All those guys are investing to get 10% or whatever the percentage of the token. Binance used to, I don't know what the deal is now, but they will say, yeah, we're going to need to take a slice of your tokens as well to list. And then now you've got listing, but part of that deal is, well, once you float the token, where's the liquidity coming from? Oh, you need market makers. Oh, so you're going to go to the market makers. Market makers come in and they go, all right, I will market make. I'll provide liquidity. But the market making in crypto is not market making in regulated TradFi exchange where you're providing both sides of liquidity. These guys come in, they take tokens and cash, and then they get paid a lot, and then they have a thing called a call option, which is fancy speak for if I can get this price up to the strike price for my call option, um, I fulfill I get these tokens and I can dump on it. And then so what you see is on launch day on an exchange, the price gets market made upwards to the strike price of their incentive, right? Once they hit that incentive, um, things going to dump, right? Whilst this is being market made up, your job as launching a token is to talk to the influencers. And you get the shitty ones to start with a small sphere of influence in the early circles, and you go bigger and bigger and bigger until you get the big guys that you're going to pay a lot of tokens to. Um, and as this price is running up, each one fires to pump this coin. And the community's going wild, right? While all the insiders, the seed investors, the VCs, the exchange, the market makers, are all dumping into this pump. And then once they hit the strike price, boom. That is how it works. That is how it works. That is a financial fraud. Yep.
I really appreciate you coming on, man. I've had an absolute ball. Conversations flowed. I've been wanting to interview you ever since I started, to be honest. But we just didn't get a chance during the Spaces interviews to bring you on. I don't think, did we ever have a chat on Spaces?
No, that was my sort of 3 years of being off voice interviews and
I didn't
streams and
think so,
stuff.
yeah. But
Yeah.
I was like, yeah, I got to get a chance to interview Will. But and I'm like, okay, when I do a podcast and I dox myself and everything, we'll get him on board. Like, you were one of the first names that I really wanted to interview. I didn't think you'd be available so quickly. So thank you for that, for making yourself available. Quite a few people I've got to sort of interview after like 10 days, 2 weeks, 3 weeks.
Yeah,
Um,
I'm not really making a habit of jumping on interviews, but it's a testament to your account. Archie, I follow you, and it's a good you do a good service to the Bitcoin world, and I'm
I
sure
appreciate
he still is.
your support, man. I know that amongst the biggest accounts, here's the other thing, like Max and Stacy were one of the first, no, they were the first big accounts to retweet and follow me, like when I was barely 5,000 followers.
Mhm.
That's the other thing. So there's a kind of
Yeah,
like
solid.
there's a thing there, it's like, but I remember when you followed me, I was almost beside myself because when I started the account, I didn't know that it was actually going to become anything, right? And
Mm.
then slowly you start getting validation from followers that, hey, you're actually putting out worthwhile content. And then you get to like 50,000 and you're like, is this going to become something? And you get to 100, 200,000 and you're like, holy shit, this is going to grow exponentially. I just need to grind every single day. And maybe one day I'll talk about it on a podcast, but it was hell for about 18 months. So
Oh, really?
yeah, I mean, yeah, it was talk about being locked in.
Mm.
Yeah, it was. So thank you so much, brother. I'd love to meet you one day in person. I know you got a young family, so you're probably not traveling my way anytime soon. But if you're ever in London, please look me up because I'd love to have a coffee. If not a chat in the studio, you're welcome anytime.
Absolutely. I'll do that if I ever down your way, Archie. And thanks for the interview. It's been fun.
I'm talking to Daniel when he's coming to London soon, so I'm talking to him as well.
Ozzy.
Yeah, he's
Oh,
going to
that's
come into
awesome.
the studio, thankfully. So I'm really looking forward to that. Yeah,
He'll enjoy that.
thanks, bro. I'll speak to you soon, hopefully. All right.
All right.
Cheers.